Good morning, everybody. Welcome back to another episode of the Market Open. It is a Wednesday, March 19th, 8:46 a.m. I am 1 minute late, but I am here. You know, I had a weird dream, dude. I had a crazy dream. My dream, and it happened this morning. My dream was that I woke up late for the Market Open, but I wasn't 1 minute late. I was 2 hours late. And in the dream, I woke up. I saw the time. It was like 10:50. So it's like 2 hours from when I usually start. And like I got up out of my bed in my dream. I was like going crazy. I was like, oh my God, people must be waiting, yada, yada, yada. And then I wake up in real life and it's like 7:30. And my heart dropped, bro. Because I really thought I had just missed 2 hours of the stream. But I was so happy that was just a regular dream. Also in the dream, I had to travel to do the Market Open. So like I had to take like this weird like road, and I there were like animals on the road. I don't know what that means or what that describes, but yeah, it was weird. It was a weird dream, dude. I'm getting a lot of weird dreams every day. But anyway, we're here. We're live. Very excited to be here for everybody. We got a lot to talk about. We have J Powell today, FOMC. That's going to be really important. I'll be live at 2:20 p.m. We will get an actual decision at 2 p.m. So I'll post that on Twitter. But at 2:20, I'll be live, and the FOMC conference will start at 2:30. So we'll go through that for 10 minutes, and then we'll get into the conference, and that'll carry us into the market close. So that'll be important. After that, well, that's the main thing for today. Well, we'll talk about the NVIDIA press conference, or not the NVIDIA press conference, but the NVIDIA GTC conference. So we'll go through that this morning. I am more bullish on NVIDIA. Got a lot to say about this. I thought this was a phenomenal conference. It was a bit boring for someone like me who didn't care about all the little technical details, but in general, it was an incredible conference in terms of the types of things they mentioned and the progress they're making for the next couple of years that they're already planning out into the future. And I think NVIDIA is cheap, like really cheap. I bought more yesterday, probably will buy more today. And so we'll talk about that. And then we got a bunch of other headlines from last night. Trump and Elon gave 2 new interviews around a variety of topics, along with Scott Bessent. He was on the All In podcast. So we got a bunch of different things we can look at in terms of how these 3 are thinking of the current state of the economy. Yeah. And we will keep going from there and keep doing what we have to do. Matt Money says, Amit and my ex-girlfriend have a lot in common. They've always been late. Well, I'm happy Mr. Matt Money doesn't have any little Matt Moneys running around, but thankfully I'm here. But dude, it was a crazy dream. Imagine like you have to do a show in the morning, and then you have this dream about how late you are, like hours late. And then when I wake up and I look at the clock and it's like I'm like 2 hours before I have to go live, it was just like my heart. I was like, oh my gosh. I was just like, but in the dream, I was freaking out. I was like, holy crap, everyone's probably in the chat waiting. It's been 2 hours. Like, it's going to be so bad. I was like, what excuse can I come up with for this one? Literally in my dream, I was like, how do I BS my way out of this in the dream? And then I woke up and everything was okay. So thankfully we are here. Good morning, everybody. Meditation Mind. Good morning. I'm Beneficial. What's up? Tim says, get off the mocktails. That's a good point. Is water a mocktail? Because mocktail just doesn't have alcohol in it. So if I drink like water or coffee, can I say that's a mocktail at this point? Because if it doesn't have alcohol, if that's how we're defining it, I feel like my definition is a little bit better. A little bit of alcohol is mocking the cocktail. You guys want to say it's like just no alcohol. I'm like, okay, well, water. Water is my mocktail at that point. Peter, what's up? Erwin, good morning. Marie, good morning. Brent, what's up? What's up? Sebastian, thank you for being here. Noland, Jeremy, did you have a haircut in the dream? I did not get a haircut in the dream, but there were some weird tigers on the road that I had to travel to get to do the show in whatever studio I was. It was a weird dream, bro. It was very, very weird. But yeah, I don't know why I keep getting these weird dreams, but I keep getting them every single day. Martin, good morning. Thank you for being here. Jason, Chad, George, Pierre, Nick, Austin, what's up? What's up? Crowd Control, Beer and Chicken. That's a great name. Beer and Chicken. That's a great name. Gene, what's up? Jason, Ray, Walter, Kevin. Thank you, everybody, for being here. Let's get started onto the market open. All right, so I think we'll get started with NVIDIA, and then we'll keep going from there. We got a bunch of things to get into. Obviously, we got a lot of Tesla stuff. Tesla actually got an upgrade today by Cantor Fitzgerald to 425. Tesla's up right now, 3% of the pre-market. So we'll talk in a second about Tesla, but let's talk about NVIDIA. I think my takeaway from the conference is that Nvidia continues to be one of the cheapest stocks in the market. And I know Steve has made this argument many times, but right now people are paying 47 times for Netflix in terms of earnings and 49 times, or as of last night, 53 times for Costco. I don't understand how you fade Nvidia at 28 times unless you fundamentally think there's a problem with the overarching thesis, but you get excited for Netflix and Costco. Now, you could say Netflix and Costco theoretically don't have this CapEx boom and bust cycle where eventually this CapEx spending is going to go away and then Nvidia is not going to be that much relevant and Costco is always going to be relevant. Netflix with streaming is always going to be relevant. I guess you can make that argument, but based on what I saw yesterday from Jensen, I don't think this is a boom and bust cycle that's going to go away anytime soon. And it's mainly for these three reasons. So number one, NVIDIA is already planning their next generation chips after not only Blackwell, but also Rubin and Feynman, which is their chip for 2028, is getting into R&D and architecture. And so the headline yesterday that said, oh, Amazon's getting some customers to use their version of the H100 over NVIDIA. It's like, cool. First of all, that's an anecdotal experience about one customer. But even if it's multiple customers, they're not going to be able to replicate Blackwell or Rubin anytime soon. And NVIDIA's already thinking so far ahead, but I think Amazon and Google selling chips in-house is a threat, but it's not such a gigantic threat, which would lead to a PE compression that is double of Costco. Like, that to me just doesn't make any sense. Number two, Jensen said that humanoid robotics is going to be one of the biggest industries in the world. I wouldn't doubt Jensen when he says that. I mean, this is one of the smartest guys on the planet. Like, obviously, he thinks that there is a lot of potential here. Yes, is it going to be big business for NVIDIA? Sure. But he also sees what's happening with Cosmos. They're open sourcing a humanoid OS. They're synthetically training humanoids with Cosmos, and then they built out a new partnership with Disney and Google around robotics as well. And then finally, Jensen said, hey, all of you guys that freaked out about DeepSeek, it doesn't make sense because you're going to need 100x more compute because the reasoning, which means more infrastructure, aka chips, will be required. For anyone that has used the deep research, by the way, Grok today, Grok 3 launched deeper research. So not just deep research, deeper research. And so when you click on deeper research, the model starts like having even more anxiety with itself in order to find out what's the right answer. And that just means there's going to be a lot of tokens. And a lot of tokens means you get a longer time to be able to come to an answer, but that answer tends to be more sophisticated and much better. So when you put all those three things together, along with the fact that they had a partnership with GM, and look, I don't know if this is that threatening to Tesla, but I don't think Jensen really cares about Tesla. He just cares about self-driving becoming a thing and NVIDIA becoming a platform for all the other companies that are not having their own proprietary data like Tesla when it comes to FSD. And as long as self-driving does become a thing, which as I use it every single day, I was using it this morning, it feels like autonomy will be a thing in the next decade. If NVIDIA plays, even a second role behind Tesla, if not the first role in providing that operating system to the entire world, then yeah, that's going to be another vertical for them that's massive. And that's based on their Cosmos synthetically data trained platform for all these other OEMs. Here's Jensen on the GM partnership.
I'm super excited to announce that GM has selected NVIDIA to partner with them to build their future self-driving car fleet. The time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car. So AI infrastructure for GM, partnering with GM, and building with GM their AI. So I'm super excited about that.
Now, what's interesting about this is it's not only just AI for self-driving, but as Jensen said, AI infrastructure for the entirety of GM's operations, which I think is going to be something that can not only make the company more efficient, but I think a lot of the other manufacturers are going to be like, hey, Jensen, can you do this for us too? Like, not only the self-driving part, but can you do it for completely changing the way we do business, the way we manufacture, et cetera? And I think that's going to be a big business for them. Automotive is one of their smallest pieces of revenues outside of gaming right now. Gaming is, I think, the smallest. Data centers is the largest, and I think that can expand over time. Now, what's also interesting about this is GM had a self-driving product called Cruise that they bought for $1 billion, I think a couple years ago. They shut it down January 29th. And then they make a partnership with NVIDIA. And it's hilarious to me because it's like GM admitted they could not R&D internally a self-driving product, even though they bought a company that was dedicated to this, because they'd rather work with Jensen to be able to build self-driving. or they would have like used their own self-driving Cruise in collaboration with NVIDIA. But no, they just botched the entire thing that they spent billions of dollars on to go at it alone with Jensen. To me, that shows a lot of faith in NVIDIA, a lot of trust in NVIDIA, and a lot of hope that NVIDIA can really begin to solve this problem. Will they do it? We'll find out over time. But it does seem very exciting that NVIDIA has the ecosystem and infrastructure to get this done. So overall, look, to me, I was really bullish on this conference. I think it made a lot of sense. I think they introduced a lot of things that prove the cyclicality of the business is not as cyclical as people may think. Tesla right here up 3%. NVIDIA is up 1%. Now, NVIDIA's at a 25 PE. It's at 116 right now. It fell to 114 yesterday. Why did the stock fall? That was the number one question I got yesterday. It was like, well, if all this is bullish, why is the stock falling? I think two things. I think number one, everyone's afraid of Powell today. So that's like the easy way out. Number two, genuinely, I think we're going through a growth scare right now. And that growth scare is uniquely affecting the Mag 7. And that's okay. But like we're seeing the rest of the market get the rotation to an extent, financials, consumer, utilities, etc. And we're not seeing it happen with the Mag 7. And you would think if the Mag 7 were down on average 10% each of them, that the S&P would be down like 15%. Like you would, if it was 2024, I would be like, oh yeah, the S&P is cooked. The S&P is not, it's down 5% for the year. Like that's not too bad for the top 7 companies in the world being all negative year to date. So, I mean, I don't know, dude. I continue to buy NVIDIA. People compare it to AMD. NVIDIA's forward PE is at 25. AMD's forward PE is at, or the trailing 12 months PEs is at 103. NVIDIA's forward PE is at 22, so technically a little bit cheaper. But their trailing 12 months is 103. NVIDIA's trailing 12 months is 39. And then, you know, AMD is just not putting up the type of growth that you would imagine NVIDIA can put up, along with the fact that their margins are not necessarily the same, and they're just not the winners in this category. Also, Jensen took some shots at Broadcom. He was asked about ASICs, which is another form of competition towards NVIDIA, something that OpenAI is looking into as well. And he basically said, yeah, like those aren't going to be relevant given the architecture that we're creating over the next couple of years. So it was really interesting because it's like he threw shots at a variety of different players here. One thing that he didn't do is he didn't mention SMCI. He did not mention SMCI. And I also thought this was interesting because SMCI is one of their core suppliers when it comes to liquid cooling for GPUs, and he did not mention them once. SMCI took a little bit of a hit because of that. SMCI right here was down 9% yesterday, currently up 1.79%. Dell, he did mention. Dell took a little bit of a hit as well, only down 1.2%, but they recovered when they were down 5% after he mentioned them. So I don't know what beef he's got going on with SMCI, but in general, it really does feel like this business is not going to be as cyclical as people think. And you know, I was on the phone with Steve last night and we were trying to figure out what exactly is the street missing if it's not the rotation for the Max 7 and if it's not fears of Powell. Or sorry, what are we missing? Like, why are we so excited about NVIDIA, but the street isn't? And you know, I would love to hear everyone's perspective as well. Either you think it's Cisco and it's like, okay, the street's thinking it's going to have some epic collapse and everyone who's buying into it right now is stupid. Or the street is just genuinely super scared right now. It's a very volatile time, yada, yada. But even in the volatility of that, this is the part that doesn't make sense. Why does Costco get 50 times? Why does Netflix get 50 times for not having a net profit margin or a net income margin like NVIDIA? Costco's is like 3%. NVIDIA's is 55%. And not having anywhere near the growth. NVIDIA grew 78% last quarter. Costco's going to grow maybe 7%. It's like, what is the street liking about that over NVIDIA? The only conclusion I can really get to is they think a recession is going to happen and NVIDIA gets killed during a recession. Costco doesn't. But even that is does NVIDIA get killed during a recession? Costco, yes, it maybe gets killed a little bit less. The multiple definitely compresses on NVIDIA. But does the core business stop functioning in a recession? Like, do GPU sales completely go out the drain? I don't think so. I think a lot of the people that are buying their chips have the money to spend on their chips. So maybe it's recession fears, but outside of that, I cannot imagine anyone walking away from that conference and being bearish. And AMD, to my understanding, again, good company, but they did not put up the types of announcements that NVIDIA put up, that NVIDIA is planning over the next 5 years. Multiple verticals, self-driving, robotics, new architectures for chips. Like, you could say AMD is cheap, but then do they have the growth prospects of NVIDIA? It seems like it's lagging from that perspective. So, I don't know. I am bullish NVIDIA. It seems like it will continue to be bullish. And if the market wants to pay this much for Costco or Netflix, I think eventually they're going to have to pay a little bit more for NVIDIA, but we're going to see. Steven says Costco is predictable. NVIDIA isn't as predictable as Costco. So that's my point. And maybe that's where that's like a subjective element towards risk taking here. this conference, along with a variety of other things they've done this year, but based on what I saw yesterday, is making NVIDIA seem more predictable. Like humanoid robots seems like they're going to become a thing. Apptronic is a company that raised $403 million yesterday. They had a $350 million Series A. They were oversubscribed by $53 million. And they're another humanoid robotics company that NVIDIA, Google, et cetera, are partnering with. Figure, obviously, we've seen a lot of progress with them. We're seeing progress with Optimus. Like, humanoid robots is going to be a thing. So if the street just doesn't believe it's going to be a thing, then they obviously wouldn't believe NVIDIA is going to have a growth vector because of humanoid robots. But what if they do? And what if that growth vector is one of the biggest markets we've ever seen in history? Then it's like that. Well, that was pretty predictable, right? But I guess it's not predictable because you either believe in robots or you don't. But if you, in hindsight, 5 years from now, if robots were easily predictable, then NVIDIA should be cheap, or NVIDIA should seem cheaper than it is today. So those are my thoughts. Let me know in the chat if you're buying NVIDIA. We'll see where the price goes today. Maybe we sell off before JPOW. Maybe we go higher after JPOW. We'll talk more about JPOW in a second. But I do think that NVIDIA is cheaper here. And they continue to get cheaper the more the price goes down. I mean, like the more the price goes down, the more the valuation compresses. And I have to ask myself, am I completely wrong on this thesis, or is the street like just scared in the short term? And if it feels like to me it's not something fundamental, it's more algorithmic, it's more afraid of the macro, yada yada, then this becomes a acquisition year for this stock and for a lot of the other Max 7s. And maybe this only becomes a first half acquisition part of the year. Maybe the second half we rally, but as of now, it seems like if this is the time to acquire, then that is going to be what I'm going to be doing, at least for the better half of this year. Dan Ives did say he thinks Palantir will be a $1 trillion company in the next couple of years. He's at a conference. Look, I love Dan Ives, but I don't know if Palantir gets to $1 trillion in a couple of years. I think that's a bit aggressive. Again, I love Dan Ives. He's one of my favorite analysts, but I think Palantir has got to really be able to currently justify their multiples with their growth, and then even think of getting to, expand to 500 billion and then $1 trillion. I don't think it'll take a couple years, is my point. And maybe I'm too bearish, which I would very happily love to be proven wrong. I think it'll take a little bit more time. But yes, Dan Ives did say that at a conference, I think like 2 days ago. So we're going to see how that ends up playing out. Yeah, I'm too bearish at this point. Okay, cool. So that was what we had on NVIDIA. Let's talk about Tesla. So we got a lot of elements to what's going on with Tesla. This is the first thing I want to show you guys today, because this was, in my opinion, quite disgusting. You guys can have your own opinions on this. I personally did not like seeing this. This was the person who almost became the vice president of, in my opinion, the greatest country on the planet. Here's what he had to say about Elon Musk today.
Saying on my phone, I don't know, some of you know this on the iPhone, they've got that little stock app. I added Tesla to it to give me a little boost during the day. 225 and dropping. So, and if you own one, we're not blaming you. You can take dental floss and pull the Tesla thing off, and take out, just telling you. Saying on my
So, some of you guys might love that because you hate Elon, and I get it. You're entitled to your own opinion. I personally, as an American, feel very awkward listening to that because Tesla employs a lot of American people. And the idea that he is happy that an American company is losing stock value, aka American workers are losing compensation, value, net worth, etc., and he's cheering that on because of politics. I mean, that's the only reason for this. He doesn't like that Elon and Trump are doing what they're doing. Is sad to me. It's very, very sad. And I personally could not imagine this guy could have been the vice president of the. Could you imagine the VP of the United States, one of the most powerful people in the planet, was making statements that he would be happy to see another American company and their stock price fall? I mean, I don't know what to say to that, dude. It's really sad, in my opinion. It is wanting an American company stock to suffer and cause economic pain for millions of workers because of politics. And I just personally am not on board with that. Now, Elon did have a little response to what he said. Elon said, sometimes when I need a little boost, I look at the J.D. Vance portrait in the White House and I thank the Lord. So Elon basically saying, thank goodness this guy was not elected. Look, and again, you can disagree with Elon, you can hate his politics, you can hate what he's doing, all that stuff. But I think cheering on an American company to fail is just like, not necessarily the route to go. Having said that, we did get some updates on Tesla this morning. So we showed you guys yesterday the Teslas that were burning down in Las Vegas. That is now starting to be considered domestic terrorism from not only the president, but also from Elon. And they're looking into how they can stop that stuff from happening. Again, it's insane, regardless of if you hate Elon or not. You cannot burn down Teslas. Like, this is like, we have to have some country with law and orders. And I think it's getting a bit ridiculous right now. So that happened yesterday. Probably one of the reasons the stock fell. They got a downgrade from RBC of saying that FSD is becoming commoditized. That was the reason they fell. And then BYD introduced some new supercharging stuff. That was the reason the stock fell. Today, Cantor Fitzgerald came out. Oh, and one thing we didn't talk about in the market open, which was actually, or market close yesterday, because this came out at the end of the day. Tesla has received its first approval in a series of permits needed to eventually launch a robotaxi service in California. So this is not full-on robotaxi rides being launched in California, but the California Public Utilities Commission granted Tesla a transportation charter party carrier permit, typically used for chauffeur-operated services, which allows Tesla the ability to operate a fleet of prearranged employee trips, but doesn't give them the full autonomy to launch autonomy straight up via robotaxi. So they're getting closer to launching the robotaxi in California, but they still probably have to deal with a ton of more bureaucracy and bureaucratic steps, probably another few months after the June launch in Austin to be able to officially get it. That was one piece of good news yesterday. The stock was reacting to that after hours, up about 1%. And then today, Cantor Fitzgerald said, hey, everyone's downgrading them. We're going up. And 425. Overweight from neutral, 425. And we believe that shares are down 45% year to date. That's a buying opportunity. Robotaxi launch, that's an opportunity. FSD rollout in China, that's an opportunity. Newer lower cost vehicle, that's an opportunity. Semi-truck production, we believe that'll happen by second half 2025. And then Optimus bot mass production, we think are starting in 2026. And then deliveries will be happening in late 2026. So essentially, Cantor Fitzgerald is one of the only analysts I'm seeing that's going bullish, while every other analyst is downgrading the stock and lowering their price target. They're upgrading it, going to overweight, keeping a $400 or $400 plus price target, and saying, hey, robotics and FSD is still the story. We don't really care about the brand image. We don't care about the lowering of sales. We think those two things are going to be ultimately what defines the thesis around Tesla. So, I mean, I don't know if that's enough to say that Tesla's officially bottomed. We are up a little bit right now in the pre-markets, and maybe we can hold that after Jay Powell speaks. I really do wonder if 215 is going to be the bottom. Again, I am pretty bearish on Q1. I think it's going to be a pretty nasty quarter in terms of auto sales, and I don't know how the street's going to react to that. I did a poll yesterday on YouTube and Twitter, and the question was, hey, if Tesla gets to 150, how seriously would you consider loading up? Or do you think it's going to get to 150 or 300 quicker? We got 24,000 votes, and it was 60-40, 60% feel that it's going to be 150 before 300. But a lot of the comments I got said that if we did see 150, they would be very excited to take a bite of that apple. And I would be excited as well, because at 150, you are discounting pretty much everything that Tesla has going for it outside of the automotive business, including energy, FSD, and robotics. And that to me becomes like a no-brainer. Maybe I could be wrong about that, but I wonder if it gets that bad either internally in Tesla, brand image in Tesla, or the broader markets where we get to that point. And I guess over the coming months, we're going to find out. But currently right now, Tesla did get that upgraded this morning and a little bit of a tailwind based on that robotaxi news from California. Now, Elon did a bunch of interviews last night on Fox News. Here's a couple clips of what he had to say. This is what he said about the fire in the Tesla dealerships.
I have to ask, why? Why do I see people like I woke up this morning and saw that Teslas were put ablaze in one of your dealerships in Vegas? I've seen this happen all over the country. Bullets are being fired. Charging stations are put ablaze. Teslas are being put ablaze. You have experienced assassination, threats of assassination for you and your family. What have you done that warrants this? Because I see nothing that you have done except help our country.
Yeah, I mean, it's really come as quite a shock to me that there's this level of really hatred and violence from the left. I always thought the left, or Democrats, were supposed to be the party of empathy, the party of caring, and yet they're burning down cars, they're firebombing dealerships, they're firing bullets into dealerships, they're just smashing up Teslas. Tesla is a peaceful company. We've never done anything harmful. I've never done anything harmful. I've only done productive things. So I think we just have a deranged. There's some kind of mental illness thing going on here, because this doesn't make any sense.
Yeah,
And I think there are larger forces at work as well. I mean, I don't know who's funding it and who's coordinating it, because this is crazy. I've never seen anything like this.
And look, I would tend to agree. And I know some of you guys don't like Elon. That's fine. You don't have to agree with everything Elon does. But I would hope the majority of people that don't like Elon don't think it's okay to burn down regular working Americans' cars to express a political belief. Like, if you do, I think there's something wrong in your head. I think there's something. Anyone who's burning down a Tesla has mental issues, or they're getting paid for it, because that's not the way to resolve whatever problems you have, or to show a peaceful protest. Like, America is built off civil disobedience and the idea of peaceful protests. Burning down Teslas, especially for people that are working class citizens in America, right? They did nothing that you should be mad about. If you're mad at Elon, you're mad at Elon. But burning down his customers' cars, I can't fathom that is in any way makes sense. So, I mean, that is a brand risk for Tesla right now, and hopefully that ends up stopping. But I still am very confused how people are justifying that rationally as a way to meaningfully protest. Here's what Elon said about his relationship with Trump as well.
If I may, one last question. You know, when I interviewed you and President Trump together, one of the questions I asked both of you was, are you aware that there are groups that want to separate you, groups that would like to divide you, groups that would like to see you not work together? I feel it's stronger than it's ever been. Do you get the same sense?
I think they're getting desperate, because, I mean, the reason we're seeing this extreme amount of hatred and violence is because we're actually succeeding in getting rid of corruption and waste. If we weren't succeeding in getting rid of corruption and waste, they wouldn't care. But we are succeeding. Thanks. Without President Trump, this would be impossible. So I'd just like to say, you know, it's only possible with this president. And we've got this narrow window of opportunity with a House, Senate, and you know, a popular vote, really we're just implementing the will of the people. And we've got this window where we can finally take corrective action. We can fix the government, fix the country, and create a great future. And again, that's only possible because of President Trump. Well, I can't say enough good things about him.
So that's Elon on his relationship with Trump at the end of the day, and how he's ultimately thinking of it. So look, I know this perspective is nuanced. I know a lot of people might not be fans of Elon. I get that people don't like what Trump's doing. They don't like Elon and Trump together. I get it. And, you know, you can bring up a variety of reasons for why the same can apply to how Trump is acting, and you don't like his rhetoric and all that stuff. I get it. But two wrongs don't make a right. So, you know, if you're upset about what Trump has done in the past or what Elon has done in the past, that does not mean you burn down Tesla car. Like, that to me is where the logic there is no logic at that point. You can have a meaningful discourse over why you may disagree on a political event or how two people are conducting themselves. But the solution is not, well, let's burn down the cars that were made by mostly American workers and that produce tax revenue for the United States. Like, it's just, I don't think that's the solution. And if it's always going to be violence against each other versus actual discourse, well, then it shows one thing about the side that's engaging in violence versus discourse, right? And I think that's the broader issue that we have right now, along with what Elon's saying. I mean, at the end of the day, the American public voted for Trump. And if we live in a democracy and Trump ran on this idea of, hey, we're going to cut government spending, we're going to engage in Doge, we're going to do this, we're going to do that, you don't have to agree with what he ran on. But if that's what the public voted for in a democratic election, then if they're trying to implement that agenda, you can protest against it. You cannot burn down people's cars. That's the part that I'm not understanding. And unfortunately, that's what we're having right now in the United States. Nonetheless, what does it mean for Tesla? Well, it means that there is still a brand risk, and it's not going anywhere. I would imagine Elon is getting death threats every day. Tesla workers, Tesla employees are probably having to deal with harassment at their warehouses and their dealerships. And this is one of those things, again, I think for investors, you have to kind of overlook what this is in the short term for the long-term potential, if you believe in the long-term potential, or you believe that this will take down the entire company for the long term. I don't think it will. But this is kind of how we're kind of how we're navigating it right now. John says, Amit sure doesn't sound impartial. Well, I think it actually is the most impartial. I think from my perspective, you can acknowledge that people don't like Elon and Trump. That is fine. You don't have to agree with everything Elon and Trump is doing. But you also have to acknowledge, in my opinion, that you don't burn down Tesla cars. Like, does anyone think that's the right thing to do? Burning down a car in the name of protest? Like, I don't see it that way. Obviously, I'm more of an Elon fan than not an Elon fan. You guys know that already. I am a proud supporter of Doge. I believe what he's doing is the right thing. Hopefully, we can get rid of some of the bureaucratic waste. I don't say I agree with everything Elon does. In fact, over the weekend, I criticized Tesla for releasing pictures of Optimus and Kim Kardashian, but not actually showing any progress, right? So you can criticize a company, criticize a person, criticize an administration without burning down the cars of a CEO who you may disagree with on every political level. But the end result being violence, to me, I don't even think there's a negotiation there. I just don't think that works. I don't think that's how we should do it. So when we resort to violence, we become a third world country in terms of how we're going to navigate political disagreements. And there's fierce disagreements. People are incredibly polarized. I get it. Like, people really hate Trump. I've never seen people be as polarized as they are in Elon in the history of like covering Elon for the past 4 or 5 years. But I don't think that means you burn his cars down. And it really makes me think there's more of a form of domestic terrorism going on here that is funded by different interests, not just people randomly waking up and taking arson to a Tesla dealership. I think there's a lot more that's going on. Here's what Trump had to say on a couple different topics last night. This is what Trump had to say about Doge, and there's a couple other clips right here as well.
Look at the fraud that we've caught. We've caught so much fraud, so much waste, so many employees that never showed up to work, and we have a judge from a very liberal state who ruled like that. So bad for our country.
So I guess they closed the department. They're going to have to reopen
we'll
the department.
Be appealing it, I guess. Not I guess. I guarantee you. We will be appealing it. We have rogue judges that are destroying our country. Look at.
Here's what Trump had to say about the Tesla fires.
You consider this an act of domestic terrorism?
I think so.
Why?
I think that if and when they catch the people, and I hope they do, the good thing is they have a lot of cameras in those places. And they've caught some already having to do with that. I think that you will find out that they're paid by people that are very highly political on the left.
Meanwhile, it's because of Elon Musk. Everything he did with you consider.
So Trump did an interview with a bunch of these different topics about Doge, Elon. There was another part about tariffs that he talked about as well. Before that, let's listen to what he said about Xi Jinping, because he will be visiting the United States, in the words of Trump, pretty soon.
In the readout, it also stated that both sides want to get to an improved bilateral relationship, the United States and Russia.
That's true.
How can we trust that Vladimir Putin actually wants that, and that he's not also being influenced at the same time by his close friend, President Xi of China?
Well, look, we have our own discussions with President Xi of China, and he wants to get along also, and he's looking to get along, and we're looking to get along with him. And we will. We have a problem of trade where we have a very big imbalance with China. With Russia, we don't have that much trade, and they'd like to, and we'd like to also. They have some very valuable things for us, including very big forms of rare earth. They have a lot of earth. You know, they have a big chunk of real estate. The biggest in the world for a country by far. And on that, they have things that we could use, frankly, and that other people could use. I think that President Xi would like to get along, and I think Russia wants to get along with the United States. I also think we're a much different country than we were just a few months ago. We're a country that's now respected. We were not respected. We were being laughed at. We had incompetent leadership. This was a war, as an example, that would have never happened if I were president.
And then finally, here's Trump on Canada and a little bit more about tariffs.
Here's my problem with Canada. Canada was meant to be the 51st state because we subsidize Canada by $200 billion a year. We don't need their cars. We don't need their lumber. We have a lot of lumber. We freed it up, as you know, last week. We're freeing it up so that you can actually cut down a tree without being, given the death penalty. Because what these radical environmentalists have done to our country, but we freed it up. But we don't need their lumber. We don't need their energy. We don't need anything. We certainly don't want their automobiles. They make a lot of Millions of automobiles are sent in. I'd rather have them made in Michigan. I'd rather have them made in South Carolina or any one of
But you're
our.
tougher with Canada than you are with some
Only
of our,
because-
our biggest adversaries.
Only
Why?
because it's meant to be our 51st state. Here's my problem.
Okay, so that's the part I hate about Trump. Many times when he talks about this 51st state nonsense, like it's not happening. And so I think, why am I showing these clips? Because April 2nd is going to be D-Day. That is going to be the day that ultimately determines what happens in the context of the broader economy when it comes to tariffs. And I've never been a fan of this entire let's hate our biggest adversaries and tariff them to death. Ultimately, I don't think Trump is a fan of that either. I don't think he realistically wants to put 25 to 50% tariffs on Mexico and Canada. What I think he's doing is negotiating. And it is a very weird way of negotiating. It is obviously creating a lot of volatility in the markets right now. But I do think that by April 2nd, my gut feeling is that we are not going to have tariffs implemented on those two countries. I think we are going to have some form of negotiation before we end up getting those tariffs. And as a result, we won't actually have those tariffs, regardless of if Trump is trying to call Canada our 51st state. Because first of all, Canada's not going to be our 51st state. Second of all, we do a lot of trade with Canada. Now, they need us more than we need them because their GDP as a percentage of exports is much more reliant on the United States. Same thing with Mexico than the United States is relying on those two. But we can't, have a trade war with them. Like, that's just not going to be good for markets. It's not going to be good for the broader economy either. So Doug says right here, I think he's negotiating with investors, trying to get them to sell stock and buy bonds. I agree with that thesis as well. I still think he's playing in from it on that angle. The 10-year, by the way, was down a little bit yesterday. Currently, right now, it's back up to 4.3. We need to see what Jay Powell says to see if that comes down. But the point is, in another 2 weeks, we're going to have to figure out what goes on with tariffs. And everything Trump's saying right now, everything that the reason, Doge is so relevant right now is, again, it has to do with tariffs. And it has to do with the deficit. You could hate Elon all you want, but as an investor, you have to pay attention to the implications of Doge for the broader economy and the implications of Doge on that 10-year bond. Because if we actually do get it to come down in any meaningful way because of Doge having any savings, if they're able to get any savings passed, given what happened with U.S. aid that got shut down by a federal judge, then we should see some momentum. If not, then we're going to continue to have a spending problem. And it looks like that spending problem is not going to stop anytime soon. Let's listen to Julian Emanuel. This is one of my favorite analysts from Evercore, and get his perspective on what's going on in the markets. He believes that we are not headed to a recession or a bear market anytime soon. And he lays out a couple of details for why we're likely going to remain more bullish than not.
Price and expectations. So valuations have gone from very expensive, not egregious, very expensive, to just expensive. But when you think about the elements that end bull markets, valuation alone is not one of them. You typically see what we would characterize an uncooperative Fed. That's not going to be the case this time. The Fed is going to cut rates twice this year, in our view. FOMO, certainly not there after the last month's performance. And then the bond vigilantes. And I think, if anything, this has been a positive, the fact that whether it's due to a growth scare or policy or what have you, yields are contained. So what you're left is then the probability of recession. Now, the dislocations from the policy uncertainty have certainly raised that specter in people's minds. We think what you're actually pricing in right now is essentially a full-on case of stagflation. And the reason we say that, and it's not our base case that it turns out that way, is because when you look at past stagflation episodes, the market tends to average down 10 on an annualized basis. We're really trading along those lines. And you see leadership from the very defensive sectors, staples and healthcare, put that all together in us. We think a lot of the pain has been discounted. The negativity is still quite intense.
Yeah, that Bank of America Global Fund Manager survey that was out today actually had stagflation as sort of the highest answer among people who said, what kind of environment are we in? We need to define that maybe a little bit. Is that just that, there's an upward bias to inflation and risk to growth? I mean, it's obviously not 10% unemployment and 10% inflation.
So we actually think that there are breakpoints and psychologically, and actually this volatility, I think in a lot of ways confirms this. Stagflation to us is anywhere from 0 to 1.5% on US GDP. Obviously, less than zero is more akin to recession. And inflation, core PCE at 3% or higher.
Okay.
Now, look, the data has been mixed, and there were elements of last week's inflation reports that tell you that if we didn't have tariffs staring us in the face, we'd probably start to continue on that path towards lower inflation. And it's not clear that that isn't going to be the case.
Right. Yeah, we're still kind of within the bounds, I guess, of that. You mentioned that we don't have an uncooperative Fed. We have the decision tomorrow. Do you think there's a risk that the Fed is going to be interpreted as uncooperative at some point if they essentially say, we're just staying pat as long as possible?
I think, again, part of this dialogue is separating the soft, the sentiment data from the hard, the statistical data. And the statistical data has yet to really say that we're in a substantive weakening of the economy, which is why, given all the noise around Doge and potential job cuts there, the data over the next number of weeks is likely to be important. But look, a week and a half ago, Chairman Powell made the point that he felt that the soft data and the hard data were separate. And we do think that he's going to be able to thread the inflation part of the stagflation needle. It's the stag part that's gotten people concerned at this point.
And they're also concerned because of the Atlanta Fed GDP Now projections of negative growth. So that's going to be very important to take a look at. But what Julian is saying right here is basically all the core tenets that would create a bearish market are not happening. The only thing that is there, which is what he said in that clip, that could lead any person to feel okay, like it's 2022, is recession, because everything else is not really adding up to the levels that it needs to add up to. Yes, the foreign trade policy uncertainty is definitely there, and that's creating some volatility as well. But kind of the core things that would typically end a bull market is not what we're seeing play out into effect. And maybe the data gets a lot worse. Maybe we start getting tons of job losses based on the non-farm payrolls, private payrolls reports, et cetera. And we'll get the new ones in about 3 weeks. But if we don't see people losing their jobs, it's really hard to say, all right, we're getting into some massive recession. And as a result, their advice, Evercore and a lot of those other firms, are you hold your nose and you buy the dip, because these are opportunities at the end of the day where valuations have compressed, multiples have gone down, but that doesn't mean actual earnings growth meaningfully has gone down. It just means valuations aren't as expensive as they were before, which is more of an opportunity. XRP, you guys are mentioning it. It is up 8% right now. They the lawsuit against them, which I don't even know what the lawsuit was about, it got dismissed. So for all the XRP heads in the chat, congrats. I don't own XRP. I have a friend who you guys know about who swears this thing will become the next like $1 trillion currency. So it's now on its way to get there, up 9% after the case is being dismissed. Shout out to Steve, dude. Steve is probably very happy that this is happening, if he even knows that this is happening right now. Oh, wow. Steve, look at that. He just sent me a text about it. Of course he would be happy about this. There you go. He sent me a text. He's like, did you see this about XRP? Yes, Steve. I saw it about XRP. All right. Wednesday, March 19th, 9:30 a.m. The stack market, once again, is open. All right, wake your ass up. We have a green market, at least for now. Let's see if it stays green, but we got SMCI up 2%, Nvidia up 2%, AMD up 0.5%, Tessie up 2.5%, Costco up 0.5%, Netflix up 0.5%, Joby's up 1.3%, ASTS is up 0.2%, Uber is up 0.3%. You got Berkshire Hathaway that is hitting all-time highs. Shout out to Buffett. All-time highs on Berkshire freaking Hathaway. Verizon's down, Intel's down 3%. It was up 3% yesterday. Rocket Lab's up 2%. Google's up about 1%. Celsius down as growth gets some momentum today. It looks like Celsius goes red when a lot of these growth stocks go green. Amazon's slightly down, TSM slightly down, S&P 500 up about 1/3%. We lost 1.5% yesterday, or 1.4%. So a little bit of a recovery today as we get into it. Baba was down 5%. That's up 1.4%. Robinhood up 1.5%. Robinhood officially unveiled betting contracts as well, not only for basketball, but for the Fed funds rate decision. So they officially unveiled this yesterday. And yeah, anyone who thought they were slowing down on prediction markets, they are ready to expand at every level of prediction markets. I love it. If you hate it, just scroll past it in the app. It's really simple. You just don't look at it. If you want to bet on this stuff, you're allowed to bet on it. And I think that's going to create some juicy revenue opportunities for Robinhood. So Robinhood right here up 1.76%. JetBlue's up 0.18%. Lazar, that company with the Mark Rober video, is up 0.3%. They're up about 30% for the week. HIMS is up 1%. MicroStrategy is up 2%, almost back at 300. Grab at 460. That's up 0.11%. Affirm's up 2%. You got Intuit's up 1%. Palantir 84.71. All my Palantir, or not all of them, but I think 3 out of the 7 Palantir interviews will be out today. Probably after the market close, around 6-7 p.m. The Archer one will be out. The Wendy's one will be out. And I believe the Databricks one will be out. So those 3 are going to be the ones, or the TWG one, because the TWG one was really good. It was the guy who's known Palantir for 20 years in the Marines, and then he brought them into his current company right now. So those will be out a little bit later today. I know the Archer one, that's the one people care about the most. That one's up about 1% in the opening markets. Adam Goldstein, you guys will hear from him, CEO of Archer. Apple 214, that's up 1%. Microsoft's up 0.5%. Royal Caribbean's up. Norwegian's up. United Airlines is up. Delta's up. Carnival Cruise is up. SoFi is up. Reddit is up. Walmart's up. Rivian's up. The Q's 477, that's green. PayPal slightly green, but it is green. Google is green. Block is green. IWM, small caps are green. Silver's down, which makes sense because silver tends to go down when growth goes up. Yesterday it was up because growth was down. Silver right here, down on the day. Broadcom's up. Bitcoin's up. Rubrik's up. SoundHound's up. iBit's up. Nvidia's up 2%. Tesla's up almost 4%. Everything's green. Everything's green. First 3 minutes of the market open today, we got some green. Now I will ask the question like I ask in the chat every day, but it's, do you trust this green? The one thing I'm a bit skeptical about is that we're going not super green, but relatively green before J-Powell. And if you guys remember, we've done this rodeo at least like 10 times, but the past 3 times, J-Powell speaks at 2:30, market pumps until 3:30. By 3:30, I remember this because it happens every single time, we dump. 3:30 to 4, last 30 minutes of the trading day, we dump after the market gets excited about J-Powell. So let's see if that trend continues. Last time we had this happen really badly was December 18th. That was the Christmas J-Powell presser where he wasn't really that hawkish or dovish. He was kind of just neutral and the market just like tanked on that. So today we're going to see kind of how this plays out. But so far, not doing a horrible job holding this green. S&P 500 up about 0.36%. Robinhood up 1.27%. Nvidia 1.7%. And then Tesla right here 3.7% on the day. Shopify, big green up 5%. Is there any news on Shopify? That is a nice green. Dude, Shopify was at 120 at one point this year. So again, like, do I think Shopify is cheap at 98? No. Do I think it was like egregiously expensive at 120? No. But was it like overvalued? Yeah. And so like, again, that coming back down to 98 and maybe this comes back down to 85 or 90 and then it kind of normalizes in this range. I think that's a reasonable start to 2025. What's unreasonable is Shopify being at 150. And that's another thing Julian Emmanuel talked about in that clip we were looking at. The guy asked him, hey, like what about the euphoria and FOMO and like meme stock frenzy that we were having a couple of weeks ago, mid-February? Doesn't that scare you about this market? And Julian's argument, which was, I think, a very reasonable argument, was that in 2021, we had that for an entire year where like things would just go up and there was like no checks and balances. Everything was just crazy. In this market, we had it for a couple of weeks. We had Palantir at 125, probably shouldn't have been there. We had Robinhood at 65, which you could justify could get there on their earnings growth, but probably was too quick. You had Reddit at 250. Like, yeah, we had that for a couple of weeks. We had Fartcoin at $1 billion market cap, but we put the brakes on that. That's not happening anymore. And I think that's relatively good for going up later in the year versus getting into an egregious euphoric market that we were in mid-February. Obviously, hindsight is 2020, but yeah, I mean, like things were getting aggressive at that time. And honestly, as I'm saying this, I should have sold some Hood. I had to pay some taxes. I should have sold 1,000 shares of Hood when it was at 65, knowing that I have taxes coming up. But even I was blinded by the fact that like, no, we're going to 100, baby. Like this is like, and then I had to sell I had to sell Hood at 40 instead. Missed out on $20 a share to cover some of the taxes. And like the smart thing would have been, hey, it's at 65. It's up like 50% in less than a month. I should like sell. I should take some off the table to pay this tax bill I have coming up. And I didn't do that, right? And so you live and you learn, and you kind of deal with it. But like even the fact that I didn't realize, like, hey, I should probably take some off the table. I was so enamored by like, no, the momentum is so strong. That just goes to show how aggressive and exciting the market was, but also how expensive it was getting as well. Same thing with Palantir at 125, right? I know a lot of people probably wish they trimmed, took some off the table. Palantir, it's a, I wouldn't sell Palantir for taxes. I would sell Hood for taxes to show everyone where my loyalty lies. It's still Palantir. But even then, I know a lot of people thought it was aggressive, and we ended up getting that correction, which was, I think, needed. So it is what it is, but I don't think that was the worst thing in the world to get a little bit more of a reset. Okay, what else are we seeing right here? So we have Nvidia kind of holding on a little bit to this red green candle, 116.78. We do have some red right here from 118 down to 116. Let me know if anyone bought Nvidia yesterday. I did buy a little bit more at 116.45. I think it dropped to 114, so it didn't exactly get the bottom. But we'll see if it can stay at these levels. 116.6 right now on Nvidia. I do think the market is going to be a little on their edge around what Jay Powell's going to do. Now, for those wondering what Jay Powell's going to do, well, he's not going to cut rates. There is a 99% chance that he doesn't cut rates today. There's a 1% chance that he does. And if we see stocks go red in the next couple minutes, it's probably because people are still afraid of what he's going to say. Now, what do I think he's going to say? Nothing that different from what he said a week ago. However, if he can make some argument for shelter inflation being elevated and that being an indicator to the Fed that inflation is coming down, or make an argument around weakness in the labor market, which I think he's going to say the labor market is not that weak because he probably doesn't want to admit the labor market is weak. But if he does admit that we are seeing more signs of weakening in different parts of the economy, that is bad news, but it's technically good news because it's what the market wants to see in order to get that inevitable rate cut. But the question is going to be if that happens, when that happens, and how he sort of says it. And I think that's what everyone's going to be listening to, every syllable about what he says at 2:30, because he's not going to say anything that we don't know. It's going to be the read between the line answers to questions around tariffs and trade policy and the way the Fed is looking at inflation over the next 5 months to see if we're going to get that May cut. Right now, the probabilities for a May cut, by the way, are only 18%. And Bank of America came out today. They said they don't expect the first cut until September. So a lot of people are expecting it in May. Some people are thinking it's a given in June. Bank of America is like, yeah, it's probably not coming until September, which would be a repeat of 2024. And I think that is not what the Fed or that is not what the stock market wants to see. They want to see hints that it's coming sooner than later. We have $1 trillion in interest just on our debt we have to pay. So the Fed would, or the White House would love if interest rates can start to meaningfully make their way down. And so I think that's going to be the big story of today. Does it feel more likely than not that Jay Powell's getting closer to giving us that rate cut? JP Morgan right here, up about 0.5%. Robinhood getting a little bit of momentum, getting hit from 41 to 40.58. That's up 1.5. S&P 500 currently up 0.3% here right now. The website I was looking at was the CME probabilities tool. I'll put that in the chat for anyone that wants to look at it. Where's Meta? Where is Meta? Meta went below 580 yesterday. Meta right now basically at 581. We talked about this with Jason yesterday. I think Meta on its fundamentals, yes, is obviously cheap and much cheaper than it was at 740, which the fact that it got there is kind of crazy. I mean, that's another example of just hey, even Hood at 65 didn't have to be egregiously overvalued. Meta at 740 also did not have to be egregiously overvalued. Was it expensive? Yeah, but was it oh my God, this makes no sense? No. You can make an argument for Meta 740 or Hood 65 and not sound like an idiot. But the problem was it happened, the velocity by which it happened, I think, was too quick. And that's where my mistake came as well. It's okay, this happened so quick, there's probably going to be some give me backs, especially if we're not in a raging bull market. And then, the tariff thing really became intense, and then all these stocks are reset. So look, it's not at 740, it's at 580. But if things get ugly with tariffs, that's why April 2nd is so important. That's why kind of buying anything until April 2nd is a little scary, because you just don't know what the tariff policy is going to look like. But if there are no tariffs, then maybe it's a buy the dip. If there are tariffs, then I think every stock, including Meta, is going to get a little bit more pain. And we're going to find that out over the coming weeks. Aren't they going to allow the banks to hold more treasuries? Yes, which is going to be good to get bond yields to come down. The question is when that's going to happen. I think Trump would want it to happen immediately. VG is up 9.27%. This one is down 50% from its IPO. So that one's starting to get a lot more momentum coming back as insiders are buying. But yeah, the banks holding more treasuries, that regulation or that deregulation hopefully is passed like in the next month, next 2 months. And then we should have a little bit more pressure on bond yields, which would be a good thing as well. What do you think about the timeline for the Grab deal to take place? So remember, Grab is not confirmed to be buying GoTo. This is my speculation based on the reports that I read. Grab slightly down today. I think the timeline would be 6 months. If they get a deal done, I think it would be in the next 6 months. I don't think they would take them a year. Like if they can't get it done in 6 months, I don't think they're going to be doing it. But if this entire year is dedicating to get that deal done, then I would be happy by the end of 2025, because that deal just fundamentally changes their market position inside of Southeast Asia. Nvidia losing a lot of steam right here, 30 cents away from going red. Let's see if this sell-off ends up taking place across the rest of these growth stocks. But yeah, for Grab, I think it would take another 6 months for them to officially make this happen. Amit, sorry if you spoke on this already, but was there some news on Tesla that pumped the stock overnight? Yes. So Tesla has gotten the first set of permits they need to unveil a Robotaxi in California. That was the news yesterday. Originally, I thought they were immediately, like they just were granted full access to unveil Robotaxi. A lot of people thought that. But then when you look into the details, they got one permit out of like probably 100 different permits they need. But it was a big permit. And so they're getting very close. Close would mean hopefully, by the end of the year after the Texas launch, to launch a full-on Robotaxi in California, which is probably why the stock is pumping. They also got upgraded by Cantor Fitzgerald today to 425, and basically the firm was like, hey, all this brand stuff is stupid. Like focus on FSD and robotics. That's what matters. And that's why it's up 2.8%. But, 2-3% for Tesla really doesn't mean much at this point. It's like, can it sustain itself in this crappy macro that we have right now? And again, a lot of these gains that we're seeing, Shopify up 6%. You can't trust that before Jay Powell speaks. If he says anything that's pseudo hawkish, a lot of these stocks are just gonna take a hit. Celsius right here. When Celsius goes green, that's how we know the S&P is getting ready to go red. That's hilarious. The S&P 0.17% away from going red. Celsius was red. Now it's up 1%. It's like Celsius is inverse the S&P 500. It's actually hilarious. But that's what's happening. Yeah, so I'll be in SF pretty soon with Tanner. I will try to take a Waymo with him and Roy, and we'll try to do our first Waymo ride because I've never done it yet. So yeah, when I'm there next week, I will try to take a Waymo and see what the experience is like. But hopefully we get to see what it feels like to be in a Waymo Robotaxi. Why can't banks buy treasuries right now? They can, but they can't buy as much. So if we can let go of some regulations that allows them to have more on the balance sheet, which would be good for bond yields because banks want treasuries and you need people to buy them for those yields to come down, then that would be a win-win for everybody. It would definitely be a win for Trump. So I think that's a no-brainer. I think they're going to get that done. Question is going to be when. And if it does happen soon, that would be great for bond yields right now. Nike's also having earnings tomorrow. Nike and FedEx has earnings tomorrow. Nike right here, 73.07. Again, that's red because everything else is green. FedEx as well is a bit down for the day. Tesla right here, 231. That's up 2.7%. Still holding on its 2%, but it is down from being up 4%. Okay, we had Bessent on the Olin podcast yesterday clarify some arguments around tariffs as well. So let's listen to a little bit about what he's saying and try to get an understanding of how these guys want to manage fiscal policy.
We're trying to do three things, and I think you may have talked about it last week before.
Yeah, the three legs on the stool.
The three legs on the stool, and from the outside, you intuited that very well. I would do just a little refinement on that.
That's what I was going to ask you. Yeah, just tell me where I was right and wrong.
But you were adjacent to everything.
Okay.
So on one, we are trying to bring down this massive federal debt, cut the spending, but in a
Jensen will be on CNBC in 15 minutes at 10 a.m. So we'll have Jensen on CNBC in about 15.
Controlled way, because you can't do it all at once. I don't like to repeat private conversations with the president, but I'll repeat this one because I think it's it really illustrates where his head was at. First time I went to see him, saw him at Mar-a-Lago, and walk in the door. He said, Scott, how are we going to get these debt and deficits down without causing a recession?
Fantastic.
And
Great question.
that's exactly where we are now. How are we going to get the debt and deficits down, not cause a recession? And I said, sir, when you win, you didn't get us here. We're going to set a goal by 2028. We want to get back to the long-term average. We're going to deflate it slowly. And
long-term average being about 3% deficit to GDP.
About 3.5% deficit to GDP. And like I keep saying, the U.S., we don't have a revenue problem. We have a spending problem because we are averaging right about 18% revenue. And I'm talking about federal government, federal government only. We're at about 18%. And Biden administration blew the spending out to 25. Normally, it's about 21 and a half. We have the 2% inflation, nominal GDP, real GDP is 1.8, so we get nominal GDP 3.8, and it all works out.
Yeah.
And it was very interesting. I had one of the heads of one of the Singapore sovereign wealth funds here last week. Guess what Singapore spends in terms of spending to GDP?
Deficit 3%?
They have no deficit, but they spend 18%.
18%.
18%. And he said, we have a lot in common with the Trump administration. We like small government. We don't like immigration, illegal immigration, and we like personal safety, which I thought was very interesting.
Sorry. Okay, so we'll finish more of that in a bit, but essentially his argument is, hey, we got to cut spending. And if we can meaningfully cut spending in a way that can help reduce the deficit while keeping our growth stable. Now, obviously, I agree with a lot of people in the chat saying, well, they're doing a ton of tax cuts. That's not going to help with collecting tax revenue. I agree. Like if you have all those tax cuts, you have more of a deficit. The Trump administration's argument, Bessent's argument is that if we have all these tax cuts, it'll create more growth. We're going to find out. We're going to find out, right? If you cut taxes and you have another $500 billion that we have to make up from somewhere, if you don't have tax on tips and you want to get people that make under $150,000 not paying taxes, like, yeah, you're going to have more of a deficit. Who's going to pay that? How are we going to get that money? Their view is that the tariffs or that the increased manufacturing growth in the United States, that is going to create the revenues to be able to allow us to make up for that deficit. We don't know. I mean, we will find out over the coming months and years if that actually ends up playing out. But that is going to be the debate. And that's what the market is going to have to see validated in one way or the other. And that I think is ultimately going to drive how equity prices are reflected as well. But that is this administration's plan. And the question is going to be if it actually ends up working. Amazon goes green. Google goes green. Robinhood's getting a boost right now. Robinhood just blasted through 41. Wow, 41.38. That's up 3.14%. Again, Robinhood's very high beta to the market. Market's going green right now. If Powell says anything to tank it, we could see a reversal on Hood pretty easily. So that's one thing to keep into account. But we are seeing some deep pockets of green. Nvidia recovering a little bit from that 115 low, and then Tesla back up to 3% at 232 currently right now. Someone says it took Singapore many years to get there, a stable and same government since they got their independence. Yeah, for Singapore, I mean, their journey has been one that it took a while for them to ultimately get to where they are right now. And a lot of it was just being really disciplined on how much they were going to spend. And I think Republican or Democrat, the past 20 years, no one has been disciplined on spending in the United States in particular. And, I don't know if you want to blame Biden on this or if you want to blame Trump on this or blame both, but after COVID, both of them passed massive stimulus packages that printed trillions and trillions of dollars, which is why the one person I don't blame for any of the issues we have going on in the economy, even though everyone loves to blame him because he's easy to blame, is Powell. Powell had to deal with the Federal Reserve printing or the Treasury printing $7 trillion in like 2 seconds and had to figure out how to navigate inflation. Now, was he late on the whole inflation is transitory thing? Yes. But also, I mean, I don't think any chairman of the Fed can easily recognize how bad it's getting before it happens when you're in that type of a scenario. And you had a lot of people losing their jobs. So you probably had Powell not wanting to hike rates in 2021 when a lot of people were still unemployed. So Trump and Biden printed tons of money. And now in this administration, they have to be able to deal with the effects of that. And that's what we're seeing right now. You know what's really interesting as well? We printed a ton of money in 2020, and we never really felt the pain of that until 2022, at least in the stock market. But like 2020, the markets went straight to the moon. 2021, it was pretty much the same until we topped out in November. And then 2022, we finally felt the pain of all of that money printing. But it was only 12 months of pain. 2023, 2024, we were back up to the moon. And so maybe one could make the argument that 2025, it's time to actually feel that pain, because feeling the pain was not just raising interest rates. Like that sucked for investors because like high rates is bad for equity prices. But feeling the pain is like cutting the spend that the trillions of dollars we printed basically ushered us into in terms of navigating how to deal with all that spend. And then obviously the interest payments on the debt that we acquired. And maybe 2025 is a year where we just have to deal with more of that pain. Hopefully that pain is just not a 2022 type of year in terms of the stock market. But it was a lot of money. It was a lot of money that we ended up printing. I blame Nancy. Yes, let's blame Nancy. That's a good scapegoat for a lot of this stuff to blame. Aren't we already suffering enough? Look, look, we've gone through pain over the past couple of weeks, but that pain again comes from Palantir going from 125 to 80. That's not real pain, in my opinion. Like that sucks. I get it. It sucks for me too. I got a big Palantir position. I don't like seeing it get cut off by 30% in what basically seems like 2 days. However, I also am rational enough to know that at 125, it probably didn't deserve to be there that quick. Same thing with Tesla. I mean, if you had a heavy Tesla position at 480, you didn't trim, you didn't take any profits, you thought it was going to 600. I feel you. Felt the same with Robinhood at 65. I thought we were going to 70, 80. But it probably didn't deserve to be at 65, just like Tesla probably didn't deserve to be $5 away from going to 500 at that time. I don't think that's real pain. I think that's just a resetting. Now, a real pain would be Robinhood goes to 20, Palantir goes to 30, Tesla goes to 100, which is basically what we felt in 2022, a full-on 37% drop in the NASDAQ. I don't think we get that this year. I think earnings are too good. I really do. And so hopefully it's not going to be as bad as we see. Yeah, also 2022, that's correct. We did have the Russia invasion of Ukraine. That is correct. And that raised gas prices. That made inflation go nuts. So that is another geopolitical event outside of just money printing that created a lot more pain. Again, I go back to what Evercore is saying when it comes to the nature of this bull market. What ends a bull market? You need certain characteristics that put a definitive end to the bull market. One of the things you need, which is what we had in 2022, is an uncooperative Fed, right? A Fed that is working against you, that is antagonistic. Jay Powell in August of 2022 in Jackson Hole said, expect pain. Literally, verbatim, he said, expect pain. So he was warning us like, yeah, it's going to be messy. We have a Fed that's very cooperative. We have a Fed that's going to cut rates. Now, how quickly, no one knows, but they're definitely cutting rates this year. And so the fact that the Fed is going to be able to cut, it's just a question of when they're going to be able to cut, I think is what really matters versus having a Fed that we're fighting against, because, you know, currently we are not really fighting against this Fed. And hopefully we continue to not have to fight against this Fed, because if we do, things could get a lot more messy. But that is not the characteristic that would hurt this bull market, I think, currently right now. Let's hear from Mike Wilson, Morgan Stanley. And this guy was pretty bearish 2023, eventually flipped bullish by mid-2024. Here's how he's thinking about the current state of the economy. We got Jensen on in 5 minutes, I believe, on CNBC, and then we'll switch over to him.
Said as much. The question is, what is that? How do you measure that? I think clearly the labor market is the thing they're watching the most. Right now, most of the weakness in the labor market is in the government sector, because they're trying to, shrink the government and maybe even cause a soft recession in government to some degree. So does that spill over into the private labor market? If it does, I have no doubt the Fed will respond to that, but we're not there yet. The other thing that could happen, though, Joe, is you get more turmoil in the markets, and the Fed has always been much more focused on credit markets and funding markets. We haven't seen that stress yet in a way that the Fed would worry about. But remember, in 2018, they responded to that too.
You think recent market action has been somewhat constructive in that 5,500 on the S&P held?
Yeah.
And that sets up what you're calling a tradable range, which means we could go up enough to make it worth your while to get long?
Yeah, I mean, that's so we talk to clients about this every day. That's what they want to know, not what's happening over the next 12 months, but like, how do I make money today? So like our view coming into the year was probably a little out of consensus. We thought the first half would be tougher because expectations were pretty high on the first half. The new administration was very clear that they were going to be, sequencing their policy to be somewhat more growth negative. The tough stuff comes up front. And then the back half is when the better policy starts to flow through. So a tougher first half. I just think people came into the year a little bit complacent that the president was going to do the things he says he's doing, right?
You know, we've been talking about this, not just this morning, but for a couple of weeks at this point. Do you think what's happening with the market is nervousness about what's emanating from the White House and the policy and the tough things they're trying to push through, and, you know, concern about whether tariffs are on or off? Or do you think there's something that's really happening with the consumer? We've heard from some retailers. We know consumer confidence numbers have taken a hit. What do you think of those underlying issues?
Yeah, I think those are good questions. I would say another variable I'll bring in a minute. So I think it was expectations versus reality. So as we all know, the market
from a stock valuation.
Correct. Well, not just valuation, but just euphoria around the second half of the year. Let's not forget, it wasn't just the election outcome, but it was also the Fed was cutting interest rates.
Yeah.
The Fed stopped cutting interest rates in December, and valuations were high. So we had to reset sort of this continuation of what had happened over the last 6 months. So that was part of it. The other thing that happened was, yes, the expectations on the growth in the first half were probably too high. The policy is one impact. The other thing that hasn't really been discussed a lot is also this cloud around AI CapEx.
Yeah.
Kind of like that kind of got into the markets at the beginning of the year.
When we heard the earnings that came out from all of the big spenders, they kind of verified that, yeah, we're still planning on spending these tens of billions of dollars.
That's right. But there's a deceleration going on. So we had to kind of work off the deceleration. That's why we think 5,500 is a good level, because assuming it doesn't roll over into something much worse, that should hold. So I feel good that there's a tradable rally at 5,500. We got wildly oversold. People's expectations now are kind of in line with reality. And now we have to kind of wait to see how all this stuff kind of plays through into the summer. If growth gets worse, then we could have lower levels. But we've had a lot of price damage over the last 3 months, not just in the S&P. I mean, the S&P is down 10%. Many stocks are down 20, 30, 40%. So the markets, as usual, got ahead of it.
For the year, growth concern and volatility, both likely to persist. What about it? So your worry is growth. You don't think inflation is even with tariffs, that's not the main thing to worry about?
No, that's probably where we were out of consensus with most. Most people thought growth would be too hot and inflation would come back. We're in the other camp, or I'm in the other camp, which is that growth is probably going to be the concern, and we see that in the marketplace, right? Bond and stock correlation again is positive, meaning higher rates are good for stocks, lower rates are bad for stocks. And that was a real change about a month and a half ago. So until that flips again to negative correlation, we think the equity market's focus is on growth.
Growth.
So essentially, Wilson's like, hey, there is going to be a tradable rally that we're seeing right now. He's not full on bullish of 2025. The Q's right here gaining about 0.5%, Robinhood up 3.6%. But he's rather saying there is momentum in the short term for how these equities will trade, given there is confluence with how bond yields are being positioned. And that's primarily because of this idea that there's a growth scare that's not really a scare that should be taken at face value. This is very similar to what Tom Lee said on Sunday as well. I would agree with that. The real thing that's hovering over everyone's head is April 2nd and tariffs. And if we get a further delaying or a negotiation on tariffs, which again, my gut feeling is we're going to get some deal that's passed and there's not going to really be 25% tariffs, then I think the market rallies, because I think the market's like, all right, we don't have to worry about this anymore. There's an official deal. Trump's not going to be tweeting every day about tariffs. He hasn't tweeted about tariffs in the past 4 days. So maybe they're getting closer to a deal. Maybe he's not tweeting anything because he doesn't want to publicly say anything because his negotiations are actually becoming effective and they're getting things done. But we'll find out in a couple weeks. But yeah, it'll be choppy until April 2nd. And maybe April 2nd is the day that determines that markets can go further to get like momentum that is more stable and they're not constantly going back and forth. And maybe the momentum is to the downside if the tariffs end up passing. But I really think wide scale tariffs on automotives, pharmaceuticals, semiconductor stocks of 25% and more on our two biggest partners, two biggest allies. I just don't think that's going to happen. I really don't. And if it doesn't, then hopefully this creates a good buying opportunity right now. But if it does, I think we're going to have a little bit more pain. Meta right here at 585. Shopify still up 6%. SMCI is up 4%. Nvidia back to 117 from 115. So that one's still holding on to its green. Tesla as well, above 229. Came to 228 at one point. Right now at 230.41. Down a little bit from 234, but still green. AMD is currently red on the day. Yeah, Mike Wilson was bearish in 2023. He got bullish by the end of 2024. And, he's been doing this for 20 years. That's why people kind of really were not impressed by 2023 and 2024. He was calling for the S&P to 4,200. And a lot of Morgan Stanley clients got killed by being in bonds over stocks and just saw the markets rip for 2 years. And so, now he thinks it's going to be kind of hard to easily get a recession after these 2 years of momentum. And again, if anyone's scared about a recession, you just look at the jobs data. Like, a recession happens when people lose their jobs, or when the market is close to having mass unemployment across different sectors, industries, etc. Like, that is the definition of how we get negative growth, because people don't want to spend money because they're afraid. Now, consumer confidence, I agree, is not the best. Consumer confidence came in the lowest since 2022, last Friday. Like, yeah, that's not good. But does that equal like massive job losses? I don't know. Because if consumers are not being as confident, but they're keeping their jobs, that means their savings are just going up, which isn't bearish. It just means that they're not spending as much, which is okay. But if they legitimately don't have the money to spend because they don't have a job anymore, I mean, that's when things can get bad. Robinhood right here, 10 cents away from 42. I don't know what's causing the Robinhood pump today, to be honest. Don't know what's allowing Robinhood to go. Is SoFi also up today? SoFi's up 3%. Is PayPal up? PayPal's up 1%. Affirm's up 3%. Affirm's up 7%. Yeah, we're getting a lot of fintech getting some potential rotation today, along with the Mac 7. Jobs is a lagging indicator. Yeah, that's true. But again, when you look at the JOLTS report that we got last week, there's 7.5 million jobs open. And like, at some point we have to believe that number or we don't, right? Because if it's a fake number, then it's like, all right, so it was fake with Trump, it was fake with Biden. It's like, either these jobs are real or these jobs aren't real. And yeah, maybe we need a few more months of data, but non-farm payrolls was also pretty good at 150. Like, we need to really see bad jobs data for it to be obvious. And maybe it's not obvious right now, and that's why the people that are betting on a recession are going to make a lot of money, because they're betting when it's not as obvious, right? But I think for the far majority of people to really say, all right, it's a recession, the data needs to be there. Robinhood at 42. I don't know why fintech's going up today. SoFi as well, getting a bid. All of them getting some love right here. Kind of weird. Maybe the algorithms are just picking fintech today, but Robinhood up about 5% currently right now. Where is HIMS? HIMS is up 1% as well. HIMS is a buck away from going below 30. It hasn't been below 30 for a while. It's the basketball contracts for Hood. Well, Morgan Stanley came out and they reiterated their $90 price target on Hood based on these prediction markets. So they are, Suho gave them $80. Let's get a little bit more coverage on Nvidia. We got Jensen coming up pretty soon. And let's get some coverage on that GTC event that happened yesterday.
Bumpy road lately. Financials are doing well today. Industrial being the ticker, and followed by reiterating their buy ratings on the stock this morning after a headline-filled keynote from the CEO, Jensen Huang, at the company's GTC conference. Our next guest joins us live from the event. Ahead of our big interview, Harsh Kumar from Piper Sandler has a $175 price target buy rating on the stock. Harsh, the big headline seems to be the CapEx, right? The $1 trillion of CapEx spending on data centers by 2028. Was that your takeaway?
Yes. So the company is incredibly well positioned. If you look at the history of companies, there have been extremely few companies that are as well positioned as Nvidia. They're addressing some of the most tremendous high growth end markets, such as data centers, such as robotics, such as autonomous driving. And each of these can be a multi-$100 billion opportunity. But yes, specifically within data center, it's entirely possible that you can get up to $1 trillion each year of annual CapEx spend. We're already several $100 billion. And, famously, Microsoft is $80-something billion, and others are following. And these guys are not slowing down. And so we can certainly see that cadence continuing to several $100 billion, going up to $1 trillion, somewhere around that time frame of 2028.
So what happens to your estimates at this point, and why do you think the stock didn't react more? Is it just not trading on company fundamentals right now?
So we're at a point in time where we're caught between the macro and potential calls of slowdown and all the stuff associated with tariffs. It's causing a little bit of uncertainty. There is an argument that is being made that the CapEx growth has stalled just because the CapEx numbers have gotten so big. But I think it's a little bit misplaced. I think we are only looking at the data center market at this point in time. When I was talking to Jensen, for example, and other folks at NVIDIA, it was very evident to me that the next step on the horizon is possibly software. And software could be $1 trillion market for.
All right, we have Jensen. Here we go.
Of artificial intelligence.
You sure are.
Yes, and you are the leader. And you put out a number yesterday. I've never heard a CEO ever say, listen, we got $1 trillion roadmap, and it's going to happen sooner? How is this possible?
Well, you know, we're building AI infrastructure for the world. And it is very clear now that we're about $150 billion of AI infrastructure into a journey of trillions of dollars of infrastructure. And so we've got a lot of AI to build.
I was here last year. Totally different feel, different vibe. Felt there was a limitation to it. What happened in 1 year?
Well, in 1 year, we made AI better. It's smarter now. It can reason. We made AI more useful. Just about every industry and every company, all these companies are all building AI into their systems and into their products. And we've got a lot more energy and a lot more land and just so much more desire to build out these AI infrastructures.
There were people who just even a month ago were saying, look, there's an outfit in China that is going to eliminate a lot of what NVIDIA provides. And therefore, NVIDIA's, these chips are way too expensive. What I saw yesterday was that not even a factor in your thinking or anyone else's thinking. It was an abstraction. It was a distraction.
Well, it is true that these processors and these computers are quite expensive. They're quite expensive to make. And this is the largest chip in the world. It is the most complex computer the world's ever made. And so it's expensive to make. However, it saves you a mountain of money because it does work, saves you a mountain of money because the amount of time it saves you, the amount of times the processing time it reduces is incredible. And number two, now because it generates tokens that you can monetize, the amount of money it helps you make is incredible.
Well, why just in the last 24 hours do I hear from GM? Do I hear from Disney? Do I hear from Cisco? Do I hear from BlackRock? Do I hear from CrowdStrike? Who all of them say, look, our partnership with Jensen is key to our future.
Well, AI is the foundation, the operating system of every single industry going forward. And the reason for that is, of course, everything that we do in life is underpinned by intelligence. And we create, what NVIDIA builds, is the infrastructure for manufacturing digital intelligence. Now, we're looking at this as one processor, but in our data centers, we announced a way yesterday to connect millions of these together using silicon photonics. And so we now have the ability to go from 100,000 of these things to millions of these things running in the data center at the same time. And that infrastructure, that factory, if you will, is the factory of the future.
Now, I do want to go for a moment before I go to robotics and autonomous vehicles. I want to put on my journalist's corrosive, sardonic hat and say, well, wait a second. What if the president puts 25% tariffs on and Michael Dell is slowed down? HPE, we talked about yesterday, they're slowed down, and it could put a limit, if not a cap, on your growth.
Well, we want to build, we're enthusiastic about building in America as anybody. And so we've been working with TSMC to get them ready for manufacturing chips here in the United States. We also have great partners like Foxconn and Wistron who are working with us to bring manufacturing onshore. So long-term, manufacturing onshore is going to be something very, very possible to do, and we'll do it incredibly.
But the Chinese are still a key partner right now. You have a lot of businesses. I would say 17% of your business.
Yeah, in the near term, I would say in the near term, tariffs will not, the impact will not be meaningful, and.
But AI diffusion, that last initiative by Biden, which said really there are only 18 friendly countries that we want you to do massive business with, that seemed arbitrary, if not judgmental, in a way that I think you and I would say it makes no sense.
As you know, as you just look around here, there are companies from all over the world. AI's gone mainstream. AI isn't some magical technology. It's incredible technology.
Well,
but it's used for everything. It's used for healthcare and education and agriculture. And
yesterday, I thought you downplayed Groot. When we think of icons, we think of Groot. And in many ways, you gave that 2.25 minutes. But isn't Groot robot going to save most of the marriages in this country by doing the dishes?
Yeah, you're right. Doing the dishes and taking the trash out, walking the dogs, you know. And so GROOT stands for General Robotics Technology, GRT, GROOT. And it stands for General Robotics Technology because the technology finally arrived where we could create the AIs. We build them in the data centers. It requires large AI infrastructure to train these robots, simulate these robots in virtual worlds that obeys the laws of physics. And we partnered with Disney and DeepMind, and we created this thing called Newton, which simulates physics incredibly accurately. And then you create this AI in the cloud, in the data center, and then you move the AI brain, if you will, download it digitally into a physical robot. And so the technology that we've been working on for some time is really making enormous progress. Robotics and robotics industries, general robots and other forms of robots, is going to be one of the largest AI infrastructure opportunities for us.
Well, if you can simulate, train, simulate, and run, you're expedite. It's going to happen much faster than people realize. When I hear that actually arc of how you can do it, I'm going to buy a robot within the next few years.
Yeah, but you'll rent it. You know,
okay, I'll rent it. I can't afford to buy it.
Well, we'll rent it.
Only the oligarchs can
hire a robot.
No, but you're saying this is going, and the robot is my size.
Yeah.
It can do things that we only dreamed of doing. It's not artifice; it's reality.
And it doesn't get bored. Doesn't get tired. You know.
You sure?
Oh yeah.
Because when I think that they can reason, they want healthcare.
No, no, they'll want entertainment, and yeah, sure. Yeah, we'll keep them company, and they'll keep us company.
But this is not the dog robot lifting Jello cubes. We're now well past that.
Cute. Yeah, they're incredibly cute, as you know.
I know.
And we can make them do all kinds of repetitive work. And just, seriously, the world is short of tens of millions of workers in factories, and factories would be more than delighted to pay $50,000, $70,000 a year to have some of these robots come in and do the repetitive tasks and all the dangerous work that we'd like not to do.
This is exigency. I think too many people feel that they're going to replace us. They don't realize there's not enough of us.
There's not enough of us, yeah.
Well, okay, so but you were talking about we need an amount of computation that's easily 100 times more than we thought. So far, so good.
Yes.
Last year. Were we that off last year?
Yeah, we're way off, yeah.
We were. We didn't see it.
Yeah.
We just didn't know how important it is.
Well, we realized that reasoning is very important to intelligence. And we realized that one-shot AI that we were using wasn't representative of intelligence, and that we were going to make incredible progress. And last year, with reasoning models coming out, ChatGPT's reasoning model and others, and it just took off. People love these reasoning models. That we love that it's giving us multiple answers that we can choose from. We love the fact that the AI is reflective of its own answers. And you know, did I answer that question right? And could I have better options that I can present you? And so there's a lot of different ways that the AI has now become much more reasonable.
Okay.
And reasoning, and so that requires a lot more computation, hundreds more time computation. And so this new level of AI is going to demand a lot of chips, which is the reason why
but you're talking
demand
about
for
millions
Blackwell.
of chips. You're talking about data centers. A huge data center? Oh, Larry Ellison data center. How many chips does that need?
Hundreds of thousands.
Hundreds of thousands.
Yeah.
Well, that's millions of dollars for Nvidia.
Every gigawatt of data center is somewhere around $40 to $50 billion of
And
opportunity.
what percentage does Nvidia get then?
Out of that, every gigawatt is about 40 or 50 billion dollars.
But I thought that you were in trouble and things are slowing down and the Chinese are taking over, and we should be looking at you and thinking this is a meme stock that's going to 90.
we have a very large opportunity ahead of us.
Okay, so I worry about this. You give a roadmap. I was laughing on the inside. I'm sorry.
Yeah.
You give a roadmap, and I know about the Vera Rubin, and I'm saying, why don't I just wait for Vera Rubin? Why can't I skip this? The Blackwell Plus? No, well, forget that. I'm jumping over, and therefore I'm going to wait till 2027. What do you say to those customers?
Well, this is building an industry and building business, and we're trying to build business every year, as you know. And it's not like buying a TV or, buying a bicycle. This is something that you're building these AI factories to run your company. You're building these AI factories to run other companies. And so they're going to want your AI factories right now. The reason why I lay out our roadmap for several years is because the world is building AI infrastructure, trillions of dollars of it over the next several years.
But we can't comprehend trillions.
Well, this is the new industrial revolution, and inside, underpinning an industrial revolution are new factories, and we are the factories of the future.
What are we talking about? We think about Fulton and the steam engine. We think about railroads. Yours is so much bigger than all of those.
Well, the world is bigger now than it was back then, right? It's a $120 trillion industry, GDP around the world. And now this new factory called AI factories is the underpinning for all of it. And so the idea that $100 trillion of the world's GDP will be underpinned by trillions of dollars of AI factories is very sensible.
With NVIDIA in it, and that's why we're going to wait and talk more later on Mad Money. And I want to thank the Squawk on the Street 10 o'clock gang for letting me coming in here with an eye-opening discussion. Thank you, David. Thank you, Sarah.
Thank you, of course. Look forward to catching a lot more. You guys just started there, so.
Did you guys like that interview? That interview was it was a little weird with some of these questions. I think the main question that I don't think he asked like the real questions that people care about. The real questions people care about are, hey, like the street doesn't believe in you guys for some reason. Can you clearly say why the street is wrong about your growth expectations, your future, yada, yada. And then I think he just needed to give Jensen the next 10 minutes to talk. It was a little bit too much cutting off randomly to interject with stuff that didn't matter. Also, it was quick. I thought it was going to be a long interview. That was relatively quick. That wasn't as long as I thought it would be. But okay, that's what we got. So kind of a nothing burger from that interview. I mean, we heard Jensen speak for like 3 hours yesterday. So everything we needed to really hear, we got from yesterday. Nvidia stock after that interview, 1.5, 117.3. Yeah, at least it's holding above 110, but not any meaningful change from yesterday. Tesla right here, 233. That's up 3.6. Robinhood, 42.43. So fun fact about Robinhood. So one of you guys mentioned that in the chat. We talked about XRP already. We talked about XRP. The court case dismissed. Happy for the XRP people. But yeah, outside of that, nothing else that crazy about XRP. XRP right now is up about 11%. So looks like that court case getting dismissed is a good thing for XRP. Williams-Sonoma was selected to be included into the S&P 500. Their market cap right now is $18.5 billion. The requirement to get into the S&P 500 is $20.5 billion. The rebalance is in 2 weeks. So I am just curious, how do they include Williams-Sonoma if they don't get their market cap above 20.5 in 2 weeks? And why did they pick a company that could have 10% drawdown and immediately lose the eligibility requirement over Hood, which at these levels could have a 40% drawdown, which could happen. I'm a bit skeptical it would be that intense, but because it's already had a 30% drawdown. But Robinhood could lose 40% of their value and still be eligible for the S&P 500. I mean, dude, I really feel like Williams-Sonoma paid somebody. like how the hell do they get included over a Robinhood or Coinbase that are just so much more eligible? I mean, like, what happens in 2 weeks if Williams-Sonoma is below 20.5? Like, do they not include them? Do they pick someone else? And why would you even pick a company that's so close to the eligibility requirement versus have a margin of safety? It doesn't make a lot of sense here. But Hood is up 5%, SoFi up 3.5%, PayPal up 1%, and then Affirm right here at 6.5%. HIMS as well up 2.5% currently right now. Matthias says those aren't requirements. They're baselines for consideration by the board. The board considers other things like sector diversification. Interesting. So I thought you had to legitimately have that market cap or else you wouldn't even be. Well, even if it's just a board, even if it's just something the board considers, and that's the cutoff for how they consider it. The point is, in 2 weeks, that consideration would have been false, given Williams-Sonoma it may not have the market cap. So my broader question is, why would they pick something so close to the deadline, right? Or to the eligibility requirement? Because you just put yourself in a tough situation. If you fall 10%, which stocks fall 10% all the time, then you're immediately now below what you were using for requirements. Well, whatever. They're probably going to get included, hopefully next time. Robinhood will get in. The S&P 500 doesn't want gambling stocks. Look, that's fair. Hood's a full-on DraftKings, baby. This is a gambling product now. Someone was like, oh, I'm leaving Hood because they're becoming more of a gambling app. I'm like, okay. I know people that have $100 million on Robinhood that are bringing over more money. Your subjective belief about them getting into gambling and you taking your money off the platform. There's a lot of rich people that don't give a shit and they're coming over to the platform. People are really using their perspective on, you know what I found out this week? I found out this week how much people are afraid of gambling, or not afraid. They have almost like this antagonistic perspective against the concept of gambling. And I don't know what it is about gambling that triggers people so much, because to me, it's like, if you don't want to gamble, don't gamble. If you want to gamble, then gamble. People are acting like it's like this really hot topic and it's just a horrible thing. I'm like, if you don't want to go to Vegas, don't go to Vegas. If you don't want to gamble, don't gamble. If you want to scroll past it, scroll past it. But people are emotional about this. And I didn't realize that. I didn't realize people they care so much about the sanctity of protecting people from the sins of gambling. And I'm like, but if people don't want to do it, they just don't have to do it. It's really not that serious. Amit, I love sports gambling. I just prefer depositing on a different platform. Any logic on that one? No, I think that argument is bad. I think that just scroll past it. Unless people are so weak that they're going to see NCAA sports betting underneath their Robinhood app, and they're like, oh my God, I have to bet on Duke or Kentucky because I'm addicted to gambling. And that's, I feel like, a deeper problem with the person. You literally just scroll past it. It's not, maybe I'm oversimplifying it, but I don't think it needs to be in a separate app. I think that's way too aggressive for no reason. Did you see Jeremy talk about why Elon should leave Tesla? I did not see him talk about that. I'm sympathetic to that perspective. My dad has the same perspective. He's like, get this guy out of here if he's not going to show up to work. I just, look, at the end of the day, I believe that Elon is the best thing for Tesla. I think Elon is Tesla. Tesla is Elon. There's a massive key man risk there. If anything were to happen to Elon, I think it would be very bad for Tesla. And I don't think you can get Optimus and FSD to scale the way Elon thinks it can scale, many, many trillions of dollars, without Elon. I don't know what CEO ends up doing this. I'm sympathetic to the people that say, hey, this guy's not even showing up to the office, he should be out. I just personally think the only reason Tesla's worth $750 billion is because of Elon. So same thing with Karp and Palantir, dude. I don't really know if there could be another CEO of Palantir. The way Palantir is, the way their culture is set up, obviously, the core business, I don't think goes to shit if you have a new CEO because it's B2B SaaS, recurring revenues, all that stuff. But I still think there's a magic to Karp being that CEO and creating that culture, and it's hard to replicate that. So there's a key man risk to Palantir, like there is to Tesla, which is that Karp and Elon are the guys that I think really make this happen. I mean, there's something about Karp getting on stage and talking that makes you just want to own more of this company, right? There's something about Elon being an inspiring figure for many, even though he's a toxic figure for others, that gets people to want to buy into Tesla's vision. So Palantir is down. Yeah, Palantir is currently right now down about 0.5% here right now. What else do we have? Amit, do you consider this a weakness of a stock relying too much on a CEO? Yeah, it's definitely a risk to the stock. So if you invest in Palantir and Tesla, I think you are investing in Karp and Elon at the end of the day. Yeah, Steve Jobs was definitely a core element of Apple. They've been able to navigate successfully from 500 billion to 3 trillion since he passed away. Obviously, a lot of people don't feel the actual innovation of Apple has matched their market cap, but the company itself has been able to function for the past 15 years, even without Steve Jobs. And I'm sure Tesla and Palantir would be able to be good companies without Karp and Elon. I just don't know if they would be phenomenal companies without those two. Rocket Lab's down. Okay, Rocket Lab was green. We aren't giving up all the green in the market yet. Rocket Lab down 0.5%. Robinhood's still holding on to 5%. Again, that's kind of weird. Markets aren't ripping for Robinhood to be ripping like that. So I really don't know what to think of that going into the J. Powell presser, but we'll find out. Nvidia's up 1.4. Netflix is up 2.5. Google's up 0.5%. And then the S&P. Well, the S&P is up almost 1%. The S&P is actually doing okay. Basically recovering what they got from yesterday. JPow's at 2:30. I'll be live at 2:20. JPow's at 2:30. So I'll be live 10 minutes before. And we'll see what JPow has to say. Okay, here's another clip from Bessent on Doge as well, and why he thinks it's something we have to do in order to get these bond yields to come down.
Doge, that I am completely aligned with what Elon's doing. And everyone says, well, do you have to do it so fast? Do you have to do it? Like I said, I've only been in this business for 7 weeks. I've only been in DC for 8 weeks. But the thing I can tell you is if you don't move fast, the vested interest will weigh you down.
Totally.
Like the quicksand will come up, or
the claws get
the claw. Yeah, everybody's got lobbyists. Everybody's got. Yeah. I mean, think about it. Within a 10-mile radius of here, 25% of the GDP of the U.S. pulsates through here.
Pulsates
every day.
Yeah,
and everybody wants to just skim a little. I said to Elon, we were in a meeting, and I said, people are mad at you because you're moving their cheese. And he goes, it's not their cheese, it's the American people's cheese.
100%. Right. Every dollar spent goes into someone's pocket, and that person's going to fight tooth and nail to get that dollar to keep flowing into their pocket. And it's a very, there's no winning in Elon's role. There's every single time he takes action, there are people that are going to come after him, that are going to come after the administration. There's no and obviously gets recast, reclassified in the media as being something different, but there's nothing but downside as you make these changes to individual organizations that participate. And then it takes a while for the flow of that money to find its way, or those individuals to find their way back into the productive private economy. That's where I think there's a big gap and a big challenge in the perception of the actions that are going on with the changes right now, is everyone sees the cuts, but they don't see the benefits. And that's 9 months, 12 months, 15 months down the road. And that's a really hard thing to reconcile for most.
Yeah, and I'd say there are a couple of things too. Is one, everyone's hearing cuts and they think their government services are going to get cut.
That's right.
And they're not. I keep saying it's the Department of Government Efficiency, not government extinction, not government elimination. Right. And can we make it run much better with fewer people, with fewer costs? And I don't want to demonize any of these federal employees, because I tell you, in this building, I've been so impressed with the quality of the people. I would have hired them in my private firm. They are great public servants. I need you to stay for the weekend. I need a 25-page memo in 72 hours. The super high quality. I actually think when all this is done, there will have been two big savings. One will have been on these contractors.
Sure.
Which
totally. We were just talking about this.
We were with Elon just now.
We were just with Elon in the West Wing.
An incredible stat. He said, I'm not going to name the firm so that I don't want to, but he said this one organization gets 98% of their revenue.
I was in the newspaper, so we can say it. It's Booz Allen.
Exactly. So we were talking about this, and then we were going through the numbers on the other firms, and it's just the whole thing.
It's shocking.
What kind of risk management is that, by the way?
Yeah.
Yeah.
Right. But it tells you that that they didn't manage the risk.
That's right.
Tells you how entrenched they believe they were,
And how good it is for them.
and how good it is.
You're absolutely right.
And the way the grift works, you can only have 6-month contracts, but there are people who have had 46-month contracts.
Incredible.
Like they've been in situ for 20 years.
Incredible.
And it's this whole.
I'm so happy there is transparency and visibility into this. If for nothing else, the administration providing this level of insight and data, I think, is so important for taxpayers and individuals in this country to see, to recognize, and importantly, to understand just how much of this grift is going on.
Again, like, does anyone meaningfully disagree with what Bessent just said? And look, there's part of this whole Trump tariff stuff that I think is stupid. I think the whole war with Canada, calling them our 51st state, I think that all that's stupid. But the one thing I haven't felt that has been bad, that the administration is really focusing on, that I don't know if the Harris administration would have focused that much on, because a lot of them are entrenched in the lobbying efforts of Booz Allen Hamilton, for example, is cutting a lot of the bureaucracy and random spend that companies like Booz Allen Hamilton are able to get, which ends up making 90% of the contracts that they get to get rich off of, but that the government doesn't really get any value out of. And I think that's what DOGE is uncovering right here. And in the short term, yeah, that is going to create a lot of pain. But I don't know how anyone disagrees with the concept of getting rid of fraud and abuse. The process by which they're doing it, yeah, there can be thousands of different ways you disagree with that. And I'm sure, the courts are stopping them from doing a bunch of different things. So the courts also are disagreeing with it. But the principle of actually getting rid of waste and fraud, I don't know how anyone could say that's like a bad thing. Because at that point, you just think it's good to have bureaucratic organizations that continuously spend taxpayer dollars that aren't really getting an ROI. And in the private sector, that's not how it works. In the private sector, if you spend money that doesn't get an ROI, your stock collapses because shareholders just won't support it. But given its tax revenue, and it's kind of like you have to pay your taxes, there's no way you don't, you're stuck, right? So I don't know. Again, there's a lot of different ways to disagree with how they're doing it, but I think the core principle is something that I think is at least good, that they're trying to be able to resolve some of this stuff. Are we sure it's waste and fraud? They fired some nuclear workers too, and they often tried to rehire them. Yeah, look, I agree. Again, the process is not the best. There was many times where in the past month, they fired people and they had to rehire them because they weren't the right people to fire. So I agree. The process has been pretty ugly, as it probably will be, because whenever you try to do something new, there's going to be tons of mistakes, and they're making tons of mistakes. But what I'm seeing online are people that just disagree with them trying to solve waste and fraud. And from a philosophical principle-based perspective, I'm like, I just don't get the argument against it. I really don't. Even though, yeah, there's ways they're doing it that are obviously not the best right now. All right, are we getting a 1030 slam? Are we getting a 1030 slam? We are kind of seeing a little bit of a 1030 slam. Where's the S&P? 0.68. So that was at 0.8. That there's a red candle right there. I feel like it's either going to be a J-Pow slam or we glide into the press conference with not that much pain. But it's not really a 1030 slam here right now. Or it doesn't really feel like it. Yeah, kind of a nothing burger when it comes to 1030 today. The J-Pow slam is going to be the one that matters if we end up getting a nasty J-Pow slam. Okay, let's look at some other headlines. So we do have this headline right here. BlackRock, Nvidia, Microsoft, and XAI. J-Pow is going to be at 2:30 Eastern, so in a couple hours. Join an AI infrastructure partnership. BlackRock, Microsoft, and global infrastructure partners MGX have added NVIDIA and XAI to the AI infrastructure partnership, which aims to invest in next-gen AI data centers. The partnership plans to unlock $30 billion of capital with a total investment potentially reaching $100 billion. GE, Vernova, and NextEra Energy. Wow. They're also collaborating to expand energy solutions. Is Next up on that deal? Next is up 2.24%. GE Vernova is up a little bit as well. VRT and Vistra are also up about 3%. More data centers. So it looks like XAI, BlackRock, Microsoft, and Nvidia continue to build more when it comes to the broader data center space. And that, that's another reason to be bullish on Nvidia. Like, we're building out all these data centers for a reason. What's going to be in all these data centers? A bunch of GPUs. Nvidia right here, just below 117 right now. And if that's the case, it's probably because there's demand for those GPUs, which the market doesn't want to pay a high multiple for, even if they want to pay a higher multiple for Costco. But it's not like you can necessarily deny that it looks like there's a lot of demand coming. Oh, yeah, you're right. It's NEE, not Next. Sorry, NEE. Next is next decade. NEE is next era. They're up about 0.11% today. Uranium stocks, nuclear stocks, they haven't had the worst year either. I know Oklo pumped to like 60 and now it's back down to 26, but still up from like $6 where it was at 7 months ago. That's up 2% on the day as well. So nuclear is getting a bid. Next decade, though, they're not part of the deal, but they are still up 2.35%. They were up 17%. I think it was on yesterday or Monday, from 660 to 874. This is one, again, I've heard Matt and Kris talk about it. This is one, if you believe in the liquefied natural gas overall ecosystem growing, you kind of just buy and hold this because it could go back down to $6 as quick as it went up. But long term, same thing with VG, right? This is not a short term play. Like, if you believe in it long term, then, or you believe in the sector long term, that's why you stay in those names. Okay, what else do we have? J-Powell's at 2 p.m. Or do we want to do year-to-date returns? All right, let's do year-to-date percentages in the chat. My year-to-date, I think it's down like 15. It's down 7. Okay, we're down 7. Little recovery today. It was down 15 yesterday. Let's put that into the chat. What do we have on our year-to-date percentages? Dude, January, all of us were up like 20%. That should have been the first sign. It's like, wait a second. 20% in a month is a lot. It's a lot. Everyone's still probably negative right now. I mean, if you're up right now, that's not horrible. But if you're negative, you're most likely with the rest of us. Jasmine's down 9. Andy's down 50,000. Gav is up 58%. All right. Someone had some puts, I would imagine. Brandon's down 33. Palantir is up 7%. So that's good for all of us as well. Yeah, I see a lot of negatives. I see -10 to -30. Pretty much. Yeah, I mean, look, it's pretty reasonable for that to be the range given the past couple weeks. Gonna have to navigate. I had I don't know if I told you guys this, but my mom's friends, I think I told you guys a story. They came over the other day and they were asking me about investing, and I told them, just like some basic stuff. And I was like, do you want to, get a Robinhood account? Like put a little money, get into it. And they're like, oh no, I don't want to lose my money. And I was like, well, why did you just ask me about it's like, and I was like, so you don't want to even try? They're like, no, it's too scary for me. And I was like, well, this is the average American, right? They're afraid. And I straight up told them, I was like, yeah, you will probably lose money. I mean, you're going to have to learn some lessons in the market. Everyone loses money. And also you may see the account balance go down, but over the long term, it'll probably go up. But in the short term, yeah, of course it could go down. And they were just like, yeah, that's not for me. And so even, look, I know being down 10, 20% sucks, but even if you're, the reason I'm saying this is because if your mentality is in the line of financial freedom and investing and just like a growth mentality versus the mentality of I'm so scared to even try, I think that's a win. I know that's like a cliche way to conceptualize being down year to date, but you do have to remember a lot of people don't even try because they're so afraid of buying Nvidia 123 and then it goes to 117. And I think as an investor, you just get so preconditioned for dealing with that it desensitizes you to all this stuff. My mom thinks I lost all my money these last 2 weeks and had to have the talk with her. Yeah, Jason was talking about that yesterday because Jason manages his mom's money as well. And like his mom was like, let's go to money market funds. And his mom is also a Democrat. So she was blaming Trump for everything. She's like, I told you Trump was going to ruin everything. So he had to deal with that. But yeah, and look, if you are wealthier and older in life, Jason had a good take on this yesterday. It's about wealth preservation, right? Not wealth creation. And so, yeah, you got to be money market funds sound pretty damn good when you already have money and you want to hold on to it. But for people that are trying to grow that wealth, you've got to deal with the volatility. And I think that's okay because it's like if you're trying to build anything in life, like I was talking to a friend last night and, they were really trying to get into entrepreneurship, build their brand, get into like content, all this stuff. And I'm just like, you got to go through a lot of pain to get there, like a lot of pain. It takes years and years and years before you think you even have a chance to have anything meaningful start going for you. And then once you get any resemblance of like momentum, you have to be so grateful for it and hold on to it and work your ass off and like never take a day off unless you're sick like I was last Tuesday and you're coughing every 2 seconds and you just have to keep going. Right. But it's similar to investing. It's like, yeah, you want to get rich, but like you have to deal with Nvidia falling 20, 30% to get there. And for the real OG Nvidia holders in the chat, 50, 70%. You want to build a brand, you want to start a YouTube channel, you have to deal with all the negative things that are associated with that and still move forward. And the beauty of life is that journey. The beauty of life is being humble in that process, accepting that it's going to suck. You're going to lose plenty of times. You're going to be down year to day. You probably should have sold Robinhood at 65 and you have to end up selling it at 40 to help cover your taxes, right? Like those are the mistakes that you live and you learn from, but you don't sulk about it, cry about it, think you're a loser about it. Just move on from it. And you keep pushing forward. And that's the same thing with investing when you're down. You look at those numbers, you evaluate if it's a good company, you cut your losses if you need to, and then you keep moving forward. And that's it. Or you day trade. And try to get some, dude. I always watch these like TikTok day in the life day traders, and they're like, oh, I made 5,000 today. I worked like 7 minutes, and now I'm done for the day. And they don't really show you that the next day they lost that 5,000. Like the problem with day trading is you'll have a good day. Everyone has a good day, and then the next day you try to go at it, and you have a crappy day because most day traders suck. I think there was a study done on this in 1999. I'm gonna see if I can find it, but I read this white paper. I think it was like in 2022. They compared day traders. They took like 100 day traders and they compared their P&L to working at McDonald's. And the minimum wage at McDonald's outperformed the day traders. I'm gonna try to find the study and show it to you guys later. Because I remember reading this, and that's what, because I had the mentality a couple years ago, like, oh, maybe I should day trade. And then I did some research. I was like, no, this is kind of dumb. This like I'd rather long-term hold. I think selling options is a way to generate income if you really want to kind of use the markets as a form of income generation. But day trading for income is like, fuck, dude, you got to be good. You got to really be good. And like, so Jason, for example, he day trades, but he's been doing this for 30 years and he more so swing trades. He does like 1 to 2 month trades, not really day trades. But he's really fucking good at what he does. Everyone else that tries to day trade and then build some Discord, Patreon course on like proving to you that you can pay them $1,000 a month so that you can teach them how to day trade. They're all full of shit. Like almost all of them are full of shit. But the few that can do it, they do end up making a lot of money. Arnie says, I would definitely earn more in McDonald's versus being a creator today. Well, Arnie, you went all in on Palantir at $7. So you are doing okay. Every Furu on X. Yes, all these Furus on X that don't have a profile picture, but try to sell you $1,000 course. That's exactly what they do. Like, I really think if you want to make money from the markets in terms of like a sort of like income strategy, I think selling options is the best way. And there's risks associated with that, but at least those risks are predefined and you can navigate those risks. Whereas day trading, like you buy the stock at 10, hoping to sell it at 1040 and it never gets to 1040 during that day. I mean, like you're just stuck. You know, it's like, and like you have to be really accurate on the timing of it going up or down. You mean gambling with options? Yes. I mean gambling with options. Dude, look, do I think options are gambling? Yes. But I think there's sophistication in the gambling with options, whether it's selling or buying, that one can deploy. Just like if you're gambling on the Lakers-Knicks game, you can use sophisticated research on how many points you think XYZ player is going to have, how many rebounds you think based on the historical analysis based on this player's history, yada, yada. But it's still gambling. So this is why I get confused when people are upset that Robinhood's introducing these betting contracts. I'm like, all of it is gambling. Options are also gambling. It is a gamble to think that Robinhood will be $100 by 2027 and buying a call option. Like you got to be out of your mind to think that's not a gamble. Now, it might be a sophisticated form of research that you're deploying to think about their growth rate, earnings, what their multiple would be, yada, yada. But you don't know if we're going to have another pandemic in another year. You don't know if the Trump tariffs last for like 2 more years and then there's no way Robinhood can be a proxy to a bull market because we don't have a bull market. It is still a gamble. Same thing if I sell a put on Robinhood at $35. I'm using whatever sophistication I can use to figure out that Robinhood has a good shot of not hitting 35 so I don't get assigned on the puts. Robinhood up 4% right now. But anything could happen and then it could get to 35 and then you have to hold those shares. So with event contracts, it's the exact same thing to me. It's a gamble. Like it is absolutely a gamble. You can't wheel or roll your Knicks bet. Yeah, that's fair. But like to me, the fundamental principle inside, you can manage the gamble, but it is a form of gambling. And so you got all these like morality police around Robinhood being like, well, this is the worst thing in the world. They're corrupting the youth. And I'm like, what are you talking about? Like, I've spent all week trying to understand their argument. And I'm like, I don't get it. I really don't. It's like, if you don't want to do it, you don't do it. Like, I'm not betting on the basketball contracts because I don't know anything about basketball. Like, I don't know anything about Duke or Kentucky. So I'm just staying away from it. But selling puts to me is just as dangerous. And it is a form of gambling at the end of the day. Any love for Big Bear AI at this price? Where is BBAI? We haven't looked at this one in a while. It was down 20% last week. Wow, it's below $2.99, just at that below $3 level. So this thing fell from almost $10 to $3. I don't have any love for it because I really don't know what their moat is. I think people got excited because it was having a short squeeze. Yeah, 1030 on February 18th, down to 298. I think a lot of people got excited for this because it went up and it had AI in its name. And they got one government contract that got people excited. This is a product of a euphoric market that we had in February. It needed to come down, and it came down. Now at 299 at a $850 million market cap, is it a bargain? I don't know. I don't think they're even putting up the revenue or earnings to justify close to $1 billion market cap. But I guess if you're buying Big Bear AI, you think there's some potential in the future for their AI services. Whenever I think of C3 AI, Big Bear AI, I just go back to Palantir. And I'm like, dude, I literally was at AIPCon and I saw all of these use cases. You guys will see it today in the interviews that I post. I mean, some of these customers just, you couldn't pay them to talk better than what they're talking about Palantir. And the ironic thing is they're paying Palantir. Like, they're not getting paid to talk good about Palantir. They're the ones paying millions of dollars to Palantir, but they're so excited about their partnerships. Because they genuinely believe that the organizations are transforming. I mean, the Wendy's dude, they did a promotion with SpongeBob, and there was this massive surge of demand for Wendy's. I think this was back in May of 2024. And the CEO, you'll see when he talks in the interview, he's describing how Palantir software allowed them to manage all of the demand they were getting, how it forecasted that demand was going to come, and then how it allowed them to risk mitigate in regards to their supply chain being ready to deal with this random SpongeBob promotion that Wendy's deployed that ended up going viral and led a lot of people coming into the Wendy's stores. Like, these are real examples of AI being operationalized. And so when I think of that, and then I think of Big Bear or C3, I'm like, I just don't see the comparison between those case studies. Not saying those companies can't be undervalued. It's just Palantir feels more like the real deal. People got excited about Big Bear because the new CEO had connections with the last Trump administration and worked in Homeland Security. Yeah, so it was more qualitative kind of arguments for why there would be a pump versus anything that real. Any form of stock market investment with Trump in power at the moment is gambling. Well, look, I don't disagree. I mean, but that's also my point, right? And the people that I'm debating with on Twitter, they hate this argument. But the stock market is gambling. And people hate when I say that, but it is true. Like, now again, I think there's a lot of sophistication to investing, but you're buying a stock hoping it goes up. You are taking a gamble on that stock. You can have all the research in the world you want. We've seen many times in history that doesn't matter. The market, like literally the term "the market is irrational" is based on this idea that it is a gamble in the market, and you don't know what's really going to happen. You might have an idea of what you think is going to happen, which is why we respect Berkshire and Druckenmiller and all these guys, because they've consistently proven they can be ahead of the market. But for everyone else, it's a gamble. It's just a gamble that hopefully plays out over time in your favor. So the idea that sports betting is so fundamentally different to me, I'm just like, I don't get it. I really don't get it. And quite frankly, I think a lot of these people are just long SoFi. I mean, from all the people that have been hating on Robinhood this week, all of them are long SoFi. When I look at their profile, I'm like, oh, you guys are just mad that like SoFi is not doing anything. Because if SoFi was coming out with even 1/10 of the innovation that Robinhood's coming out with, I don't think I would hear a peep from you guys. I mean, these are the same people that want crypto to come back to SoFi. How is crypto not the biggest casino in markets? Like, and you can give me all the fundamental theses you have about Bitcoin, Ethereum, whatever. Crypto is a casino way more than the stock. There's no cash flows. There's no earnings. It's literally just, hey, we think this decentralized blockchain is going to be more valuable in the future because of blah, 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 blah. Like, oh, but SoFi should definitely bring back crypto, which is like super, super safe for everybody. But betting on if J Powell's going to cut rates or not in May is like the worst thing in the world. I'm like, oh, so you just hate Robinhood at that point. Like, that's just like, I don't think these arguments are consistent at all. Warren, thank you for the super chat. He says the stock market is a gamble and I love the thrill. I agree. I love the thrill as well. And I'm not trying to police other people who love the thrill of betting on Duke or Kentucky, which is what I think a lot of people are trying to do with this argument. It's like, all right, I love the thrill of the markets. A lot of my mom's friends probably think I'm gambling in the markets, and I can't blame them because that's how they conceptualize it. But I'm not going to think that, someone gambling on the Lakers game is like the worst person in the world, and Robinhood needs to stop them from doing it. Everyone kind of is able to do their own things. Yes, J Powell, I'll be live for it at 2:30. I'll be live at 2:20, but 2 p.m. we will officially get the answer for J Powell. David, thank you for the super chat. Yesterday at GTC, I've seen Databricks Tech and talked to their engineers. Palantir is way ahead product rise. So the interview I have coming out with the Databricks dude, I think will be really good for people that are interested in the Databricks Palantir partnership. They are still going to compete. Like Databricks and Palantir will still compete for different like contracts and stuff. But from the interview that I got, the competition is turning more into a partnership because many of their clients are saying, hey, why don't you guys just work together? The data intelligence product from Databricks and the ontology Foundry product from Palantir, they can work together. So I think more so than not, people wanted to frame them as competitors when in reality, there's a lot of ways they work together. They will still compete. It's not like they're not competing, but it's also more likely than not they're going to get deals together. So I think it'll be a good interview. And yeah, I do think there's part of the reason Databricks probably had to partner with Palantir, just being logical, is like they realized Foundry is something they can't ignore. They can't ignore the ontology. They can't ignore the analytics that Palantir is offering to clients, and they can't ignore the customer demand. And so they want to tap into that. And in order to do it, they probably need to make a partnership. We got a headline on Apple right here. Apple told by EU antitrust regulators to open up its technology mobile operating system to rival makers of smartphones, headphones, virtual reality headsets. Okay, so the EU continues to be aggressive when it comes to Apple. It's interesting. We haven't had a ton of EU headlines with Apple for a while. And I think it's because the EU has been dealing with tariffs and a lot of other stuff. But I remember in 2024, there was just like, they sued them for like 2.3 billion, right? And there was a ton of stuff around the Lightning port, USB, all that stuff, App Store. So it seems like some of those concerns are coming back. Another headline we just got, Trump and Zelensky are speaking. Oh, they already spoke at 10 a.m. So we should be getting an update from Trump and Zelensky soon. If they spoke at 10 a.m. Remember, Zelensky came out yesterday and he was more opposed to the phone call that Trump and Putin had. Trump said the phone call went great and things are going to be like resolved soon. And then Zelensky made a public statement and said, hey, I don't think that the conditions are exactly the way that they should be. And so it looks like they just had their phone call at 10. We should probably get an update from one of them soon on how that phone call went. Let me see if Trump posted on Truth Social about it. And that'll get us closer to a resolution, hopefully. Yeah, he didn't post anything yet. So he did not post anything yet about Zelensky. Dr. Field says sports betting, investing, trading, lottery, casinos are all gambling. Many people are in denial about gambling for various reasons. Yeah, I agree. I agree, dude. Life's a gamble. Life is a gamble. That's why I really try to get these arguments by people that are so upset about hood. And then I just realized, oh, they're super long SoFi. Like I don't know, at least 60%, 70% of the people that I see on Twitter that are upset about this, they have SoFi in their bio. And I'm like, okay, so this is the real issue. The real issue is like, you're just upset that SoFi doesn't innovate. Dude, I've been, I still have my SoFi options. I have some SoFi shares, but ever since Noto posted that you shouldn't talk about the stock on Twitter, and he's like, hey, these screenshots are like, you shouldn't post these screenshots. I've had a salty taste in my mouth since then. I'm like, how's the CEO of a company telling his biggest supporters not to talk about it on X? That's just so weird, bro. So freaking weird. But regardless, I think SoFi is undervalued. And that's the difference between me and the people that hate hood, but they love SoFi. I can say SoFi is undervalued, and I can say I see a bull case for SoFi. They can never admit that hood's doing anything good. They find every reason to complain about hood. And I'm just like, all right. I don't get why we can't all be friends, but that's how they operate. Amit, do you think the administration can get the 10-year under 3.5% without a recession? Yes. I don't think we need to have a recession to get to 3.5. But it's going to be hard. Like, we need to show enough weakness in the economy to get the 10-year to come down, but not enough that it causes a recession, which I don't know how they're going to toe that line, but that is their plan. And we're going to have to see if it ends up working out. Admit to you day trade? No. I mean, I've done day trades before. The closest thing I've done to a day trade this year was SMCI, which wasn't a day trade. It was more like a 2-week, 3-week trade, to be honest. But yeah, in terms of like legit looking at a stock at 10 and trying to sell it at 11 intraday, I don't really do that. Last time I gambled was when I married my wife. Well, that's that's a hell of a gamble as well, right? That is a hell of a gamble as well. Amit, can you admit that gambling is a decisive issue? Yes, it's definitely decisive. I mean, that's what I learned this week. It's decisive. People are very upset about it for some reason. I don't know, bro. Maybe I'm too libertarian on this thing. Maybe I'm just like, let people do what they, especially because it's not kids, bro. Like, if you're on Robinhood, you are an adult. You are in the real world. And if you're an adult and, the average age is closing in on their mid-20s, like, you have to deal with real world consequences. These are not teenagers that are using Robinhood that are very susceptible to all of these problems. Like, if we're not going to treat these people as adults, like, I don't know. Like, to me, it shouldn't be that big of a concern, but that's what people think. Did you see Tim Walt's videos on X? Yes, I did. It's not good, in my opinion. It was very sad to see him be this against Tesla in this way. There was something. So Tim Waltz had another interview yesterday. Actually, I don't know if I have the clip, but basically he was on Gavin Newsom's podcast, and Newsom was like, why do you think the Democrats lost? And he was like, well, the reason we lost is because everyone is racist and sexist. It's like racism and misogyny. And you could see Gavin Newsom pushing back, which, there's a lot of rumblings that Newsom's trying to be the 2028 candidate. And essentially Newsom's pushing back, and Newsom's like, hey, it might not just be about racism and misogyny. It might be more about working class problems. Poor white people exist in this country, and they voted for Trump, and not because they're racist or sexist. This is, again, Newsom saying this yesterday, which you wouldn't expect Newsom to say this, but it's because of fears about the economy. And Tim Waltz basically was like, he literally said, well, I'll just kick their ass. I'll kick their ass of all the people that are being racist and sexist. And you could tell Newsom was just like so uncomfortable, because I think Newsom's realizing there is no way in hell the Democrats are going to win in 2028 if you go the identitarian politics route. If you go down the route of like, it's racism, it's sexism, it's misogyny, it's transgender issues, it's all of this stuff. Because one could argue politically, that's the reason they lost. They didn't focus enough on the issues. And so I think you got Newsom, who's getting a lot of these right-wing people like Steve Bannon on his podcast, trying to form a new Democratic Party for 2028 to basically make the case that he cares more about the issues versus identity politics. And based on the video Tim Waltz came out with today, basically saying it's nice for Tesla stock to go down, you can tell it's rooted in a lot of this tribalism, identity politics stuff. I don't know how it's going to play out in 2028, but I think we can all assume for 2024, a lot of it had to do less with your identity and more with the issues. And right now, the question is going to be if those issues change. Yeah, I agree. The Dems could easily win if they just change their strategy. Easily, they could win if they just focus on like core issues that people care about, like healthcare for all, Medicare for all. Basically, the stuff Bernie Sanders ran on in 2015. I think they could run a populist movement and get a lot of people to vote for them. But they went the identity route. And sometimes it's tough for that to win. Yeah, culture war, essentially. Culture war. It's a distraction many times, and at least this time the American people didn't vote for it. But I think it's going to be important because, I mean, look, we're going to see what the next administration looks like in 2028. A lot of people thinking J.D. Vance has it in the bag, but you never know, dude. Newsom, by the way, I said Newsom should have ran in 2024. I said he would have been a way better candidate. I thought he was going to run, and then they picked Harris. And I was like, I feel like Newsom would have put up a fight because Newsom's a dog, bro. Newsom will fight, and he can talk. He can actually like really communicate. Like he's a great communicator. And so I thought he would really go for it, but yeah, he ended up not really playing a major role. Okay, let's get some more updates on NVIDIA right here. We have an analyst talking a bit about what we saw at GTC, and then we'll keep going from there. We got Jay Powell in a couple hours on these rate cuts.
But I think they've tackled that. Actually, maybe we'll get into that with our next guest. He's a longtime researcher in the AI area, spoken on the subject in front of G7 leaders, regulators, business executives, in addition to specifically helping shape the Department of Defense AI strategy. Gregory Allen, Center for Strategic and International Studies. He's director of the Wadhwani AI Center. Joins us right here.
Great to be with you.
Nice to be with you, too. I guess let's first start off. I assume you were listening and probably paid attention yesterday as well. You have any big takeaways for us in terms of what you heard and what you believe from what you heard?
Well, I think Huang was trying to emphasize that the tariff policy impact is not going to happen to him, at least not in the near term. But the reality is these policy moves are already having an impact just on the stock price, which is being dragged down by the overall price to earnings multiple compression that we're seeing being market wide. But there's other policy moves that they need to happen in order for that realization to come true. If you want to have $1 trillion in data center capex, that means that you need an energy infrastructure build out that is adequate to supply the power for all of those new data centers. And one of the biggest barriers to building new energy infrastructure is regulatory red tape. So this is a question when you're talking about going from the data centers that we have today, which are tens of megawatts or low hundreds of megawatts, to gigawatts or multiple gigawatt scale data centers. That is a massive new energy build out. And it's not just new energy infrastructure, it's very concentrated and consolidated infrastructure really coalescing around that data center site. So if you're state and local regulators, you're looking at all of this and saying, am I going to raise grandma's electricity bill? Is this something that we really want to take on in our region? Now, the Biden administration, in its final weeks, passed an executive order that was designed to sort of accelerate the approval process for energy permitting and for electrical infrastructure. The Trump administration has been talking a big game on this, but they have yet to make any big moves.
Yeah, I mean, you know, every announcement we see now is often accompanied with companies such as GE Vernova and NextEra, for example. Even today, BlackRock adding them to their sort of partnership to build the next generation of data centers. But Wang yesterday was talking about it being the gating issue in terms of whether we can actually have the power supply we need. By the way, I don't even know what it's going to mean if he's right on robots, and we're plugging those in every night as well.
Yeah.
You know, in terms of the grid, you know, can we actually meet the challenge?
So there's definitely no shortage of money Capital is lining up to not just build these new data centers, but to also build the electrical infrastructure. But there are real questions around the regulatory red tape and also the supply chain constraints. If you're talking about building new natural gas turbine generators, for example, there's only so many companies that are involved in that, and their order books have already been filled for a long time. So those are the kinds of questions. Definitely NVIDIA can do it. Definitely TSMC can do it. Can the regulators do it? Can the rest of the supply chain do it? That's kind of the open question.
See, and again, that's the same analysis we're getting from these sell side equity research firms around NVIDIA, which is that it's not a demand problem. It is a supply chain problem. It's a regulation problem. It's a this and that problem. Can you get everyone to start cooperating and working together? And the announcement today with BlackRock shows further progress with data centers. But it's not that the demand isn't there. And this is, I think, the thing that everyone is confused about. And Steve the most, you guys have heard him on the show many times, just like he doesn't understand why people are selling off NVIDIA, off this whole cyclicality thing, when it's not about it being cyclical, it's about it not having the ability for them to grow. It's about, is the ecosystem even there to support them? And that's a dip you buy, because if the ecosystem eventually will scale up to support the demand for GPUs, it means the demand for GPUs is not going away anytime soon. And it's not this boom and bust like NVIDIA had back in 2020 with crypto mining, right? Like that was obviously like a bubble. This entire AI revolution feels more like a sustained, at least 5-year journey, if not 10-year journey. And so that is why I continue to believe NVIDIA is cheap, because eventually the earnings and the free cash flow will catch up to the price, and this multiple will get expanded when the volatility dies down. But it's not like they're massively struggling with supply problem. X is valued at $44 billion. Elon did buy shares of X at $44 billion. That news came out yesterday, which was very interesting, that Elon is buying up shares near his current price. So this was from Bloomberg. Elon invested $150 million last year to buy more shares in X at a valuation close to $44 billion. He's also open to buying more minority stakes at the same valuation, according to Bloomberg. Seems like he's bullish on X, bullish on the potential of X, bullish on the product. I'm really bullish on the platform. I love the platform. I use the platform all day. The one thing I hate is the bots on the platform. If Elon can get rid of that, that would be phenomenal. But it does look like he thinks this $44 billion price tag will eventually deliver some meaningful ROI. I would buy X right now if I had a chance to. I really would. Like I just use the platform all day. I think it can become a billion user platform, but they got to get rid of the bots. Right now, that's the biggest issue to me. Dylan, thank you for the super chat. He says, I'll be honest a minute. My dad passed away last May, and having your morning open and closing shows, I know have been able to keep my head busy with good things instead of thinking about the passing. Thank you, Dylan. Those are the comments that really mean the world to me. I'm like, first of all, I'm sorry about your dad passing away, but I really, really appreciate you getting value from the show and having that be something to distract you from the passing away. That's what I really want the show to be. Many times you never know what people are going through. If they're interested in the stock market, interested in tech, finance, like if the show can just be a form of escapism during that time, because I do that as well. When I'm going through a tough time, I use things to escape from reality. And sometimes reality sucks, right? And we have to deal with the passing of people that are close to us. So yeah, I appreciate you get a lot of value from the show. Spencer says, I just watch you so I have someone to bully. So either you can watch me to take your mind off like horrible things happening in life, or you can watch me to bully. That's also a way it goes. But look, at the end of the day, I think the value of the show hopefully should be to provide meaningful data and then the interpretation of that data on markets. I know over the past couple of months, it has gotten very political. And I know some people think I'm the biggest MAGA supporter ever. Other people think I'm the biggest liberal ever. I've started to come at peace with it, dude. Like I can't control it anymore. Like there's half of you every day that are calling me horrible names and hating me, and I'm like, I just have to take it. There's nothing more I can do. And then there is another half of you that think I'm like the biggest libtard or however you want to call. Like maybe I'm doing my job if 50% of you think I'm the biggest right-wing extremist, and then the other 50% of you think that I'm the biggest liberal. But at this point, I don't know how much more I can make my thoughts clearer. I am not super MAGA. I'm not super left. My political stances are really rooted in the markets. And I'm a fan of Elon because of what I think he's doing with Doge is good for the markets. I'm also a fan of Elon because I'm an entrepreneur and I value people that have actually built things in their life. Those are kind of where my political beliefs line up. I think Trump's doing some good stuff. I think Trump's doing some stupid stuff. I think calling Canada the 51st state is really stupid. However, I think engaging in cutting spending is really good. And so like there's nuances to all of this stuff. And I know people think I'm sometimes swinging too much to one side or the other. But the sort of core argument here is I don't care about politics. I don't. But it is impossible to ignore it in the context of markets. And I would love anyone to start their own show and try to not talk about the daily updates from Trump, Elon, et cetera, in the context of markets, because you can't, because everything affects the broader markets. I'm not trying to be Ben Shapiro. I don't give a shit about like impose. Like Ben Shapiro has a political belief he wants to impose on the world, right? TYT, they're like a super liberal network on YouTube. They have a political belief they want to impose on the world. I don't give a fuck. I don't like, you can agree on abortion, hate abortion. I don't care. And I don't get any dopamine of being like, that was a great show. I convinced a bunch of people to like Trump or hate Trump. Like, I don't give a shit. I feel happy after the show if I think we took in all the data, we tried to look at both sides of the data, interpret the data, and then make sense of what that data means for the broader markets. And if there's enough entertainment and humor value for someone like Dylan to take his mind off of a crappy thing that's happening in his life, to get some escapism by using the show. Like that's what really gives me joy from producing this content every single day. And I love performing, right? I love performing because the whole idea of what I wanted to do my whole life is be a creator, be on stage. And, you know, you guys know my story. I wanted to be the next Michael Jackson. I wanted to be this big rock star. Didn't end up having a chance to do that because I can't sing that well. I can't dance that well, but I can speak. And I really love markets. And so if I can combine those two passions and be able to make the show every day, that's what I love. I can't affect that the world is becoming so politicized and half the world thinks Elon's a Nazi. The other half thinks Elon is the greatest person on earth. And then I'm over here trying to analyze what's going on with Elon. And if I don't exactly say, oh, wow, he's a Nazi here, half the chat hates you. But if I say, oh, yeah, I kind of don't like what Elon's saying here, then the other half is like, oh, Amit thinks Elon's a Nazi. It's just like you can't navigate it. And so the only other way you can navigate is by just not talking about politics. But I promise you, it would be very difficult to get to the show. And you can watch Bloomberg, CNBC as well. You have to touch on these political issues. These are part of how you analyze market. Like, how do you talk about what's going on with Robinhood without talking about the fact that Vlad gave $2 million to the Trump administration? Like, do we just not talk about that? Is Vlad a Nazi now? You know, like, or do we analyze, oh, he's giving $2 million to the Trump administration because of yada, 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 and he thinks it's going to help them in their lobbying efforts, blah, blah, blah. Like, do we make that analysis, or do we just, oh, we're not going to talk about that because that associates politics with Robinhood because Trump's involved, so we can't discuss it. And it's just like, at the end of the day, dude, if you hate that we even bring up politics, I don't know what to tell you. Like, I can't not talk about some of these subjects. And all I can do is try to stay as impartial as I can. I mean, I have never told you guys who I voted for. You guys can have your own assumptions, but there's a reason I've never said who I voted for. Because there's no need for me to say that and then explicitly express my political beliefs. And of course, obviously I have certain political beliefs and you guys can tell, and I'm very obvious. Like, I like Elon. That is, I guess, a political belief now. But that doesn't necessarily mean I'm a fan of everything Trump does. That also doesn't necessarily mean I hate everything that the Democrats are doing either, right? There are good things that the Democrats are advocating for. In this election, they just didn't end up winning because there's like, I think I can make objective analysis that the Democrats focused a lot more on your racial identity, whereas Trump focused on your economic condition. You may think that Trump's policies to solve people's economic conditions are horrible, but his marketing was focusing on that over, if you're trans, you should vote for me. And that was the divergence, along with the fact that Trump actually went on podcasts and Kamala went on CBS and CNN. And like, that's not where media attention was. And that was the difference. That is the most, I don't know how that's political analysis. That is the most objective way of analyzing how the Trump administration used new media to market themselves, talk about the issues that mattered, and they got elected. But you say that and people are like, oh, well, you're a MAGA extremist. I'm like, I think at this point, it's telling me more about people that immediately assume one side of the aisle that you're associated with just for analyzing the situation in and of itself. And it's like, I don't know how else to navigate that. Amit votes for the market, correct? That's what I care about. That is honestly what, like, dude, there was a good take by Andrew Schultz the other day. He was on a podcast and he was just like, if you're making money, you don't care what bathroom someone goes to. Like if your financial situation is good, you care a lot less about the cultural problems in the zeitgeist. But if you're broke and you're losing a lot of money and the economy's failing and you can't find a job, then you start really caring about all these cultural issues because you have nothing to distract yourself with, because your life is not going anywhere, because you're losing purpose. Why are you losing purpose? Because you probably don't have a job. You probably don't have anything going for you. This is what happens when we get a recession, which is why no one should hope for a recession. Everyone's life gets hit pretty badly unless you're in the elite of the top 1%. If you're not in that elite top 1%, I mean, you are going to take a dramatic swing in terms of how your life operates, because your finances are going to be kicked. And then you might start caring about stuff that probably isn't that important in the grand scheme of things. But it's the economic condition that gets you there. So I think the point Scholes was making is that if the economy is good, people will be able to function in a more peaceful way. And you have a more democratic society because people stop caring about all the little minutiae. But if it's not, then shit hits the fan pretty badly. So I think that is like the core way that I approach my philosophy on politics as well. Ocean says, yeah, you have an opinion and it's okay that you have an opinion. Yes, it's okay for it to have an opinion. And the reason I'm going on this elongated rant right now, honestly, the market open is over. So if anyone wants to leave, you can. I'll be back at 2 p.m. for JPAL. But the reason I'm going on this rant is because every day, 50% of you hate me, 50% of you, I wouldn't say love me, but like you're okay with the analysis as long as it doesn't toe the line that gets your ideological belief upset. And it's like, that's just not, how are we going to function like that? If half of everyone hates me, half of it. And it's funny though, the people that hate me because they think I'm like a Nazi sympathizer with Elon, you guys come back into the chat every day to say you hate me. So it's like, yes, you hate me, but you're here to make sure you, and it's like, and that's what lets me know, okay, so this is more of a game, right? Because if you really hated that I loved Elon or that I like Doge, you just would stop watching the show. You'd be like, okay, I'm going to go watch something that aligns with my beliefs. But you keep coming back to the show to then say in the chat how much you hate Elon and how much Amit's a Nazi sympathizer, which leads me to believe that something's going on personally in your life to then express it in the chat and like to get something off your chest versus that you don't actually like the show. And I don't know how to navigate that because I'm not going to ban you. I believe in free speech. Now, have the mods been banning some people that have been spamming ridiculously? Yeah, because we're getting, 5,000 people every day. You're going to get some spam. And so like at some point, if you keep spamming Trump's the best, Trump's the best, Trump the best, or Elon's a Nazi, like, no, you're getting banned, dude. Like you cannot just use the chat as your political outlet to the world by just consistently spamming your political belief. Like at some point, it's just the chat cannot function like that. But for the most part, all of you saying these very mean things about me, it is what it is. I really don't care. I have a thick skin. My skin is so thick. If you saw it at a club, you would ask for its number. It's that simple. Like I quite frankly, I don't give a fuck what people say about me. It's the nature of being a public entity. But I do care about people getting value from the show. And when someone like Dylan says that someone said you get a fake number. That's hilarious. When Dylan says he gets value of the show and it allows him to escape from the shit he's dealing with in his real life, that's what makes the show worth it to me. Not how many views the show gets, not how many people show up, not how much money it makes. It's like someone's watching and they're watching to escape something else happening in their life. And the content is a source of just like bliss, at least for a certain amount of time for them to deal with the shit they have going on. Because I do that as well with other content creators. And I'm very grateful that those creators put out content that allow me to escape the shit I'm dealing with as well. And everyone's dealing with shit. Everyone's dealing with shit. And everyone needs a way to navigate it. That's what gives me value. But I also can't deny that a lot of people hate anytime I say anything good about Elon and Trump. And I'm just like, okay, I don't know what I have to say. I don't know what else I could say, bro. Especially when I'm telling you guys, I don't give a fuck about politics or imposing my political belief. This is why I've not said who I ever voted for. I know a lot of you guys think it's Trump. You can think whatever you want. Maybe it is, maybe it's not. I did vote. Maybe it's for Trump, maybe it's not. But the reason I'm not saying it is not even because I don't want to say it. Like, I kind of don't even give a fuck about saying it. I don't want to say it because I know it creates polarization and isolation, and that's not the job of the show. The job of the show is to focus on markets. Macro and politics is imposed with markets, but the job is not for me to be excited, to be like, oh, I have all these people that are listening to me. I'm going to tell them what I believe in around this very political thing or this like religious, like, why do I not talk about religion? Because if you're Muslim or Jewish or Hindu or atheist or Christian. Okay, like what does my opinion have to do with that, right? Same thing with politics. But if it impacts the markets, then it's an issue. Like if the government passed a law that says, hey, like you need to go to church in order to be eligible to like pay your taxes, or some ridiculous like mixing of state and church that would be egregious, right? Like you need to believe in a certain religion to even like get a tax return. It's like, yeah, we're gonna have to talk about that because that's some authoritarian crazy nonsense. But as long as there's a separation from the markets and the nature of religion or politics, then we can keep them separate. But if there's a combination of those two, then we have to discuss it. And we can't avoid discussing it. Like some of you guys get triggered when I play a video of Trump talking about tariffs. It's like, do we just not listen to what the president of the United States has to say about tariffs? Like, are we not going to... Like, are we not going to listen to what he has to say? I know you may not like the guy. I'm not a fan of his rhetoric around the 51st state, but do we not listen to what he has to say about tariffs? I feel like that's still probably relevant to an extent. Nat says, Amit, I set my alarm and to you and listen to you every morning. You are an escape to the land of education, enlightenment, and more lately, hope. Thank you for that. I appreciate it. It means a lot. A lot of you guys do wake up with me, which is super cool. And then a lot of you guys listen to the market close at the end of the day and you go to sleep with me. And that's the relationship I care about nurturing over the long term. But I just can't help if sometimes it does get a little political. And we have to analyze that in the context of the markets. Oh, Chris said, send me a StreamYard. All right. Christopher Patel is officially joining the show. Chris was like, enough of a Amit's rant. We got to talk about the market. Chris is saving you guys from this rant. That's basically what Chris is doing. It's like, fuck this stupid rant. Let's talk about the markets. But dude, at some point I had to address this, dude, because like there's like 5,000 people here every morning, and legitimately, maybe it's my brain rushing to a conclusion, but it feels like half you guys think I'm a Nazi sympathizer because I like that Doge is trying to solve issues in the government. And then the other half of you, if I do a slight critique on Elon or Trump, it's like, oh, this guy's like a libtard. I just like that we cannot have a functioning chat if everyone hates each other. It's just not going to work like that. We have to have some level of like, oh, I can agree with this, I can disagree with this. All right, let's move on. Versus being so ideologically trapped in our bubble. Chris, good morning. How are you?
Good, man. Just listen to your rant. I just have to say, if you disagree with me, you're probably gay. That's about that's how I think of everything. And there's nothing wrong with it. Just, that's how I think. Like, hey, you're just gay. And you like it, and it's okay, and I'm okay with that. That's about it. So anyone in the chat who disagrees with me, you're gay. You don't like me, you're probably gay. That's about it.
I think you are making a metaphor here about how stupid it is to be this politicized, essentially.
Nah, dude, it's just they're gay. That's it.
Okay, so what's your actual take on what I'm saying? Then we'll talk about markets. Let's spend 5 minutes on this and let's go to markets, or like 2 minutes. But in general, how are you thinking about the division that we have right now in society?
I mean, there's a lot of gay people out there. What else?
Chris, seriously, be serious.
Well, I'm being serious, dude. If you disagree with me, you're gay. That's it.
Like actually, because you've seen the chat as well, dude. You come on the stage and you'll say 2 words and people will start like, saying Chris is a retard, all this stuff. So how are you dealing with the politicization we have right now?
I tell you, they're gay. That's it. I don't even think anything more than that. Like, hey, Chris is an asshole. All right, you gay. That's it. Done. I don't even think of it far beyond that, bro. Do you think about why 2 + 2 = 4? No, I don't. I just accept it. It's like, oh, Chris is a retard. Okay, you're probably gay. That's it. Done.
No, but look, I have the same mentality. The only reason I'm addressing it today is because it's been like 3 weeks of like, you say anything about Elon, Amit loves the Nazis. There you go. And I'm just like, all right.
Bro, I'm from the 90s, okay? In the 90s, if you didn't like someone, that's it. And you moved on. Because they're probably gay. That's it.
The stream's definitely getting banned.
Huh?
So the stream's definitely getting banned.
I mean, there's nothing wrong with it. I love gay people, dude. So you hate me, you probably gay. That's it. I don't think it's far beyond that, man. And I don't think you should either. Just leave that shit alone. If they want to disagree, they want to disagree. Think about it this way. if someone keeps coming on after they hate you, bro, that's such repressed gayness, bro. That's it.
Well, I do think it's a repressed level of like having to tell this person they're a horrible person every day versus leaving, which means you don't really believe that. You just want an outlet.
Bro, you ever met a Republican who's like anti-gay all the time? He's probably gay.
Yes.
You know. So that's what it is. When they suck, I hate Kris, bro. You probably love me secretly inside, you know. I don't like Amit because he likes Elon, bro. That means that they're in love with Elon. Bro, if Elon came and said, "Hey, listen, who wants some of this cum?" They'd be the first people raise my hand. Hey, Elon, give me that cum. You know,
well, he does have a lot of people that want to be his baby mamas. Okay, so let's get into markets. What the hell's going on right now? What do you think J Powell's going to do today? And do you think we're getting a cut or not?
Well, I'm hoping that he's a little bit dovish to give the market some reprieve, but I don't think it's necessary. I think what's really important is something that I listened to yesterday during the. Did you see the all-in pod with Chamath and Friedberg and that? Remember, I was talking to you about the SLR, the ratios that the banks. Remember, I was on I think last week, and I said that the regulations around that are very important. So that's something that I'd probably follow. Allowing the banks to basically be unshackled is, I think, a key part of what the administration is trying to do going forward. So the spending has to shift from government spending to private sector spending, or at least more private sector spending to make up for that difference. Now, that transition period is what we're going to end up dealing with right now. But it does mean that we'll get much lower inflation going forward. Capital tends to be a little bit more focused when it's coming from the private sector rather than from the government side. The government side does a lot more blanket, send out of money, and capital doesn't necessarily reach the parts that are the most productive parts of the economy, and they just kind of sloshes around. So if you inject enough capital, of course you're going to stimulate the economy, but you're going to probably stimulate some not so good parts of it either. So as an example, like you look at PPP, right? The PPP loan program essentially it was a good program because it really did help the American people, like especially small businesses trying to get over some of the impacts of COVID. But then you also had tremendous amounts of fraud that was happening, you know? So the question is, what if the private sector was involved in something like PPP? Well, PPP, because it's private sector capital, I would hope that it would be a lot more stringent on who ended up getting those loans, as opposed to the government, who tends to just shovel money out the door. So, like I said, I think with this transition, we could probably see lower inflation, but at the same time, we could see like a productivity boost, and that productivity boost could probably give us that growth that we need in order to kind of get around the current problem that we have with inflation and the debt.
So what do you think J Powell says today then? He's obviously not cutting rates. So how does he navigate tariffs and the 10-year coming down in order to get the market to be more sympathetic that a rate cut does happen sooner than later?
I think, well, first and foremost, I don't think that there's going to be any cuts, right? Like that's pretty much a given at this point. Like if we hear like, oh my God, the Jerome Powell is going to be cutting today, shoot, I think the markets would actually move down, because that means that there might be some serious issues. I think on the other hand, if the Fed was saying at least like, verbiage that supports future rate cuts, or at least more than what the market is expecting, that could be very helpful. Like, oh, we're within our ranges or something like that, that basically gives some market confidence, So, I mean, like I said, so be very, very, very careful in listening to the rhetoric, basically.
But like, is there a certain type of inflation that he's going to talk about? Because CPI and PPI were really good last week, right? So is there something he needs to say? But bond yields didn't really move down. So I guess my question is, what do you think gets bond yields down based on his rhetoric? Is there a part of inflation like shelter or something he needs to mention specifically?
I think it's going to be longer term, like the summary of economic projections is what's going to really give us the rub on what exactly is going to happen. My biggest concern is summary of economic projections shows that inflation is going to be stickier, in which case now the Fed is likely going to keep rates off the table for longer. The 10-year, one thing that you have to remember that impacts it is that while we right now are somewhat, like tightening, the rest of the world is actually spending more money, right? So you're seeing China, you're seeing Japan, you're seeing Europe, they're spending more money. They're going into deficits more. So, that's money that's basically not leaving their markets and coming to ours as a safety play. It's kind of like staying away. So because of that, the number of bond buyers may not be very significant. So unless the Fed can really like, give this impression that future inflation is going to be materially lower than what it is today, I think a lot of people in the bond side are not going to be like, oh yeah, let me go buy a 10-year treasury. They're going to probably say, I could buy treasuries in my local currency. And especially right now with the US dollar weakening, that's another thing to consider also, So I think we're at a point right now where we really need short-term rates to start coming down in order to stimulate some businesses, mainly because some businesses are starting to take on water, and they have floating rate debt, which is indexed to the SOFR rate, so overnight funding rate.
So do you also think that we're going to get the regulations passed soon to get the banks to buy more treasuries?
Not just the banks, but basically a lot of businesses and other things that so all right, let me actually step back. Let me explain that one. One of the things is a lot of companies right now are holding on to short-term treasuries, right? Like a lot of companies, when you look at their earnings, you're seeing on their balance sheet that they have all this like short-term paper, right? Like Palantir right now is getting foreign change from their cash holdings, right?
Yeah.
All these businesses have a lot of cash on the hands, and they're all in short-term treasuries. Now the thing is, if you want to coax them into like buying some longer-term treasuries, right, which are still very liquid, or at least further up the interest chain, you're gonna have to cut rates at the short end. So if you cut rates at the short end, they're gonna say, well, I'm getting 2% for this, and I could get a 10% on the treasury, right? Like at a higher interest rate. Let me not, like, my next renewal, not do the overnight treasury, right? Or the
Right.
short-term treasury or the money markets. Let me buy the 10-year out, right? So a lot of people right now, even in money markets, they're sitting on short-term treasuries and they're happy with it because they're still getting a pretty decent return that's at the same level as that 10-year. So as the overnight funding rate starts to go down, money market rates are going to start coming down also, and people are going to be looking for yield. And the thing is, especially if you're a retirement fund or something like that, or especially if you're a retiree, you're probably going to be leaning more towards, hey, let me buy that 10-year treasury because I no longer get that 4% return sitting in money market. So if you want capital flows to go in a certain direction, you kind of have to basically play the seesawing game where right now, if you want people to buy that 10-year, you need to kind of lower rates at the short end so that people term out that debt, and they end up, causing that 10-year to come down. So if you remember that this is something that happened in like September, where inflation expectations had dropped. So a lot of people were buying treasuries, and treasuries the 10-year went down all the way to like 3 point something.
Yeah.
So right now there's no clear indication that the Fed is going to be lowering rates by a good amount or a good chunk right now. So people are willing to just chill in their short-term treasuries. So yeah.
So like, I guess a bullish uptrend based on Jay Powell calming down the markets around inflation expectations, and then maybe Bessent and Trump getting the 10-year to come down would be movement for the markets to the upside. However, then you've got April 2nd, and I think that just no one knows what the hell happens then, right?
Yeah. Yeah. I mean, at this point, you got to let the numbers do the talking for you. You know, like CPI, PPI, all of PCE, all these things are trending in the right direction. And so if they trend in the right direction, like for an extended period of time, then inflation expectations will come down. Right now, inflation expectations are still relatively high. So I think they should actually, in my opinion, I think the Fed should already have started cutting, but then again, you know, you don't want to be too what's the word, like too weak on it, right? Because if you have to kind of like raise again, then you'll cause more turmoil. So I think the Fed is doing a wait and see approach. The only thing is a lot of the data that I'm seeing is already telling me that inflation is going to be coming down massively in the next probably 6 months. And the biggest component that I think is going to be driving that down is shelter.
Yeah, and what I'm sharing right here on the screen is the White House economic advisor saying, hey, we are getting closer to negotiating about lowering tariffs before April 2nd. I think, this is my belief, I think there's not going to be tariffs. I think they will come out with either an extension or an agreement that Canada is going to give up whatever on the border, fentanyl, whatever, and there won't be tariffs. So what is your gut feeling? You think we actually implement them on April 2nd?
They're probably, I mean, April 2nd is when we start doing reciprocal tariffs and stuff. So I think the goal ultimately is to lower trade barriers, and that could be a very positive tailwind for U.S. U.S. producers who've basically been locked out of other markets because of the tariffs that they've had. So the thing is, like, even though it sounds a little bit perverse, this threat of reciprocal tariffs might actually end up being that free trade, the real free trade economy that we're looking forward to, that we would want, so that American workers or American businesses have a chance to effectively compete around the world. The only thing is the way that it's being done is not necessarily what, a lot of people would like. It's almost like, here's a gun, like, you're pointing a gun at someone and saying, lower your trade barriers, or be my friend. And it's like, that's not how you end up being someone's friend. You kind of have to, like, talk to them and get to know them and, share your concerns and stuff. You do it behind the scenes. But the Trump administration is just very, like, blunt. Like, you put tariffs on me, I'll put tariffs on you. And that's it. Like, we're not gonna play around with this,
Yeah. All right, last question for you, Kris. Nvidia, any takeaway from GTC yesterday?
I mean, I didn't really watch much of it. The only thing is, I think the market may be pricing in weakness in future growth for Nvidia. And even though a lot of the products that they showed off were really cool, I think a lot of them are really further out than what people are expecting. And I think their biggest revenue driver right now is data centers. So one of the things that worries me about this data center economy is that if there isn't as much tangible, as much demand as a lot of people are kind of like alluding to, then Nvidia has some serious challenges in the future when it comes to its growth, right? Because it's had such a strong year. It's a really hard year to comp against. So we'll see what happens. Like, as an example, I think one of the things that started to worry me was Microsoft cutting some of the leases on their data centers that they've already had. So they had planned on some CapEx that they kind of cut back on. And I worry that going forward, we could see the same thing happening with Google, Meta, Amazon, where they're not going to like not spend money on AI infrastructure, but they just may not spend as much money. And if that comes out, then Nvidia could take a massive drop because their revenue is very cyclical, right?
Yeah, but I think what I got from the conference is that it's not cyclical. And if you're paying 53 times for Costco and 27 times for Nvidia, where we don't have to go through the growth metrics, but it's just night and day. Even if it is cyclical, it's cyclical what, for 24 months, 36 months? It's not cyclical for 12 months. That's what I'm confused about.
Semiconductors by nature are just cyclical businesses, dude.
No, agreed. But what Nvidia introduced yesterday, even if they are more far out, well, first of all, the 100x compute demand, I think, is not far out. If all of these companies are adopting reasoning models, you need more infrastructure, right? Like that's just And now, and everyone's using reasoning in their answers now because it's better answers. So you need more compute. Unless Jensen is wrong about that, I think you're going to need more chips. And then robots, yeah, they're years out, but those are coming soon. Even if it's 3-4 years, like they're going to all need NVIDIA chips. And so I'm just confused why the street's discounting it outside of the cyclicality narrative, but maybe that's the only narrative that they have.
But then you also have like the things with DeepSeek, right? Where DeepSeek proved that maybe you don't need as much compute to get the same endpoints that you were looking for. So, you know, there's also a part that's like, hey, listen, it's not all about just compute. It could also be about efficient compute as well, you know? So I think this is just, like I said, the market is just weighing in all the negatives and saying, okay, yeah, we could be in for some, you know, some short-term weakness, and there's no reason why we should be in Nvidia while that period of what's the word?
Volatility.
Normalization happens. That normalization happens basically, you know. So like I said, one of the challenges that people are going to face right now, and this is the sad part, is everyone keeps saying, well, future PE is going to be X, blah, blah, blah. And I'm like, okay, well, what if earnings revisions change, you know? Oh, no, that can't happen. No, businesses change their earnings all the time, bro. That's just not how it works. You know, if earnings get revised down, then yeah, then your forward PE doesn't really jive. And the challenge with all of that is that right now the federal government is kind of like cutting back, so there's liquidity leaving the market, and as the market's, you know, its liquidity is leaving, people are not exactly like juiced up to spend more money. And it's the same thing with businesses. Businesses not like, oh yeah, let me buy a product that it's untested, I don't know if I need it, like, you know, and you know, risk probably dealing with like not dealing with what is it called, like not as good returns. So I'd say right now business optimism is slowing down, and that could end up reverberating into earnings. And that's the same thing with the consumer. I think the consumer is starting to kind of weaken a little bit, or at least the sentiment on the consumer side is weakening, which means additional spending is likely to be somewhat curtailed. So yeah,
I agree. I just still think NVIDIA is cheap.
No, I mean,
it's cheap, bro. It's cheap.
By a lot of metrics, NVIDIA is cheap, but the thing is, can it maintain that growth rate?
Yeah, I think that's I think that's the disagreement between the Bulls and the Bears, and I think they can. GTC gave me more confidence they can. Maybe I'm wrong, but I think that's the story over the next 4 or 5 years.
Yeah, it's all about the confidence on the consumers. I mean, the business side to say, okay, you know what, this thing is not slowing down. I think DeepSeek really did a number, because DeepSeek kind of proved that raw compute is not the only thing that we need.
Right.
We kind of want to have efficiency as well. And if you can actually get the levels of efficiency that DeepSeek proved out, then hey, maybe there's not as much need for compute as Jensen is saying. The other challenge also, and this is something that I'm not sure a lot of people are talking about, but you know, the hyperscalers, they're coming up with their own architectures. You know, like Amazon with their training.
Yeah, but that's irrelevant to me. Amazon's selling a crappier version of the H100. They're not competing with Blackwell or Rubin or what NVIDIA's working on. Like yeah, there's going to be some sales that go away because Amazon can sell you the in-house Trainium chip, but that's not what is NVIDIA's multiple is based on. It's based on Blackwell, right?
I mean, dude, if anything that Amazon comes up with, you know, decreases future NVIDIA demand, that just means that NVIDIA future growth is going to come down.
Sure,
right?
but they have to come up with something as good as Blackwell. I haven't seen any evidence of them doing that. Maybe that could happen. I agree. But
I think for me, it's about commoditization, right? Like you were saying before, AI is becoming more and more commoditized. And the thing is, the more it's commoditized, the less likely it is that it's going to provide like real tangible returns, to the extent that it forces people to spend billions of dollars on certain suppliers. So Amazon is realizing, hey, well, if we can do Trainium, and even if we can get to about 95% of what the Blackwell chip gets done, or 90%.
yeah, but no, Kris, that's a really heavy statement. Like they're doing that for H100, which was 2 generations ago. Blackwell. I mean, like again, you'd have to really bet the R&D inside of Amazon, Google, and Microsoft can compete with Nvidia. That I'm just not willing.
Yeah, but there's also Broadcom, there's Google, right? There's Meta. Like everyone is doing their own things too, man. So I'd say we need to stop treating Nvidia like they're the only player in town. That's all.
Yeah, I mean, look, it comes down to if you're bullish or bearish on that thing. Do you agree they have a monopoly on this, or do you not? And that kind of determines the multiple. Is there anything you're buying right now?
I'm not really looking to buy too many things right at this moment, until I get more clarification from the Fed and where the economy is headed. The only thing I am bullish on is natural gas. So you know me and my Venture Global thing. Venture Global and Next Decade are doing well, and I think that's the play for me for the rest of this year. I am looking at possibly buying the cruise lines, or at least buying more of the cruise lines because I already have a pretty substantial position, because I think their cash flows are still pretty heavy. I mean, still pretty good, and they'll be able to kind of. There's some tailwinds that are coming for the cruise industry in the next probably year to 2 years, depending on which cruise line you're
But
talking
you got to be betting there's no recession for the cruise line.
Well, that's not necessarily true. I think
but Kris, like logically, if there's a recession, people are not going on cruises.
I mean, do you know how many baby boomers there are? And how many?
But you think they would want to go on a cruise in a time of massive economic uncertainty? Like that just feels it doesn't logically make sense.
Yeah, I think it does. I think it does actually.
Why would someone go on a cruise when the economy is melting in front of them?
Well, one, to get away from things, and two, because cruise lines provide a lot of value for your money. So people usually go and, people are not going to stop vacationing. People are not going to stop like trying to, get away from things.
No, but okay, so let's say the baby boomers do. That doesn't mean every single seat on the cruise line is going to be, unless all of them are baby boomers, right? There's
No. Well,
millennial and Gen Z that might not.
I think the thing is, when it comes to recessions, you have a certain segment of the population that's going to be disproportionately impacted. Okay, and that portion is not going to go on cruises. But in my opinion, that segment is not necessarily the biggest customers anyway. If you look at the capacity on the cruise lines, they're usually trading at pretty full on capacity. Then you've also got international passengers that are coming in, so there's other things that could end up, giving that capacity a boost. So I don't think that we're in this zone of, hey, the cruise lines are going to, like, if the economy goes down, the cruise lines are going to go down. Like, cruise lines can navigate their way around things. The other thing is fuel costs have coming down significantly, which helps their bottom lines, right? And then on top of that, if we do go into recession, that means that now you're going to have a tremendous amount of rate cutting that's going to follow. And the cruise lines are capital intensive businesses.
That part makes sense because their debt gets refinanced. That part I 100% agree.
Yeah, and if their debt gets refinanced at lower rates, or if they're able to borrow at cheaper rates, then that means that once again that hits their bottom line. So, yeah, I mean there might be some top line like growth reductions, but you also see significant bottom line improvements. So
I'm just looking at Delta's guidance last week. They cut 50% Q1 guidance for sales, and then the cruise lines tanked on that. And so what if we actually get a recession where the cruise lines or Delta is like, yeah, people aren't traveling anymore? Like, what does that mean at that point?
So one of the things about airlines, especially like something like Delta, a lot of their money actually comes from business travel and also comes from government travel. So if government and businesses are pulling back on spend, then yeah, it's going to disproportionately impact, airlines. Who is paying for cruise? Who's paying government or businesses to go on cruises?
Yeah, that's fair.
So I don't think that that's necessarily a one-to-one. I mean, the market can think of it as one-to-one, but I don't think that that's the case. And if you look at like this note that came out of JP Morgan, they basically reiterated the same thing, that, hey, they don't see any slowdown in cruise demand, even though if the market is kind of slowing down on other parts, it's like, nah, there isn't enough. At least from what I'm seeing, there isn't enough capacity to meet the existing demand. And the reason why you're seeing a lot of the cruise lines be able to raise prices is because they've been able to kind of like have this giant plethora of people willing to go on cruises that that aren't. I'm telling you, have you been on a cruise? You know,
Yeah.
right?
No, I've been. It was like 2014, Mexico.
Yeah. I'm telling you, go on a cruise now. You'll see the difference between then and now. It's a much more different thing, differentiated product. It's a lot more focused on providing all these value-added services that are super high margin that weren't even around in 2014. Like here's an example: the sizes of the ships, they're scaled up bigger, but at the same time, the amount of like fuel that gets expensed is actually a lot lower. The other thing is like a lot of them have Starlink right now, right? So the cruise lines, you're no longer in this like metal box that's basically like disconnected from the world.
That's what it like when I went in 2014. It was horrible.
Yeah, it's not like that at all. I mean, right now, you like I said, you could still be doing your morning stream from a cruise if you really wanted, you know. So yeah.
All right, we will. I'll be back live for JPAL, guys. Kris, thank you for your thoughts. Chris's Twitter right here in the chat, and I guess today is going to be really important to see if we can get any level of momentum. But then April 2nd is going to be really what matters.
By the way, some people in the chat calling me gay. Yeah, dude, I'm gay. It's okay. What's wrong with that? I'll let my wife know, bro. You know.
I hope she didn't listen to the segment on Friday. That was
Which one? Yeah, she always listens. I always get
she always finds a way to listen, bro.
I always get the tongue lashing later. You know.
Yeah. Well, you have a nice spot.
By the way, gay just means happy. I don't know if you know that.
Oh, well, I definitely know that.
There you go. See,
given all the gay comments I get, I definitely.
All right,
Kris. Thank you. Appreciate it. Talk later.
Bye.
All right, cool. We are done for the day. I'll be back at 2:20, and we'll see what happens with JPOW in about 2 hours. We get the decision. It's going to be I was going to say cut. It's going to be a pause. It's not going to be a cut because we know it's not going to be a cut. But at 2:30, we'll be able to see whatever Mr. Jerome Powell has to say to us. Yeah, that's pretty much it. Look, in terms of the last topic we were talking about right before Kris came on, at the end of the day, it's nothing personal or it's nothing getting to me. It's just I wanted to address it because, again, if half of you guys hate even bringing up politics, the only thing I can say is like you can't keep up with the show then, because there's going to be some intersections of politics on the stock market that we have to discuss. It's just impossible not to discuss it. But for those that want to keep watching, to consistently spam that I'm a Nazi sympathizer, I just don't think that's productive, dude. It's like, and I don't want to ban people because I believe in free speech. I don't want to ban people for saying whatever they feel, but at some point it's like, it's not a productive chat at that point. You can have disagreement. I'm fine if you hate Elon or Trump, but then going all that way to the angle where you're like, all right, well, fuck you, admit you like Nazis. It gets toxic, you know? And like, I get it. We're in a very politicized time, but all I'm trying to do, I just want to, my intentions with your daughter. Now, my intentions are, I want to talk about the markets in relation to politics. I do not care about becoming a Ben Shapiro, even though I can talk faster than him. I do not care about becoming a Dave Rubin. I do not care about I don't want to be in politics one day. I don't want to be the next vice president. I don't care about starting my own media company that is rooted in politics. I don't care about that stuff. I am only talking about it because it has to deal with the markets. That's it. That's it. The only thing I care about is the markets and it in relation to markets. Like, I don't wake up in the morning and I'm like, oh, what's this juicy Trump thing I can talk about? I'm like, no, Trump's fucking talking about tariffs. All right, we got to talk about it. This is what's going to be like for 4 years. And so if people hate that, I mean, I guess you can just find something else to consume. But like the goal is not for you to jump into the show and be like, oh, Amit's influencing my political beliefs, because that's not I don't care. I truly don't care. But if Amit is talking about what Trump just said, and I hate Trump so much that I can't stand that he's even mentioning Trump, then I'm like, I don't know what to do at that point. I really cannot control it because we've got to analyze this stuff. There's no way we get away with not analyzing it in the context of the markets. Word of the day is, how the hell do you say this thing? Paragamanon? Paragamanon? Paragmanon?
Paragmanon.
Okay, there's no way anyone thought this was paragmanon. The juxtaposition of words that have a common root. The title of the Jane Austen book, Sense and Sensibility, is an example of a paregmenon. His speech relied on paregmenon to drive the point home, repeating fighting fights and building buildings to emphasize the weight of his words. Okay, this word sucks. We're going to get a different word. Paregmenon. There's no way any of you guys have heard of the word paregmenon. Okay, this word's a little bit more simpler, but I know this word. Consortium.
Consortium.
Consortium is a fancy word of a group you form for an enterprise beyond what any one member could do alone. All the grocery stores in your neighborhood might form a consortium for the promotion of local strawberries. That word kind of sucks too, but it's better than paregmenon or whatever. You guys have not heard of that word before, bro. Paregmenon? What is that? What is that? Like, I have not heard of that. Why did you bring up Tim Waltz today? I brought up Tim Waltz because he said explicitly he likes that Tesla stock is going down. That's why I brought him up. I didn't bring him up to dive into the nature of the political aspirations between the Democrats and the Republicans. I brought him up to say, oh, wow, Tesla, a stock that a lot of people care about, a lot of people have a lot of money in. This is a U.S. politician saying that it should go down. I would bring up a Republican saying that some stock should. I mean, we talk about this, dude. We talk about companies that have been so anti-meta, and like we talked about JD Vance and his stance against big tech. This whole idea of Google actually acquiring Wiz. Is JD Vance's FTC actually going to allow it to happen? Because JD Vance, like, he likes tech, but he's been in the startup world more than he's been in the big tech world, and he's not a fan of big tech if you've looked at his lectures over the past. So that is a political correlation between a politician, which Waltz is still a politician right now in Minnesota, and their perspectives on a stock or a sector of the markets. And then we're analyzing what that means in the broader context of the markets. But it's not, I hate Tim Waltz, I love JD Vance, or I hate JD Vance, I love Tim Waltz. It's just like, how does this make sense in the context of Tesla or Google? And then, yeah, my personal opinion there is that I think it's despicable for someone to want millions of American workers that have Tesla stock. Forget the shareholders. Like Tim Waltz definitely doesn't care about the shareholders of Tesla. I'm talking about the actual employees that work to make those cars, to see them get burned down. Like that is despicable to me, to see an American politician want that to go away. That's my personal belief. And if that's political, then the show's not going to be fun if I can't have a little bit of my personal opinion. And I think you guys would enjoy having zero opinion. But I feel like that opinion is not that political. That's just, in my opinion, common sense. And maybe people want to say, well, it's actually common sense for him to be against Tesla stock and for Teslas to be burned down. Okay, then we just have a disagreement. But I can refrain from commenting about a lot of things on politics, like abortion. I don't need to give my opinions on that. But then when it relates to the markets, like it does with Tesla today, yeah, you give your opinion on that. You don't have to agree with it. But those are the opinions that I think are valuable to give. Not the opinions on, you know, what I think about abortion, or what's another hot political topic besides, my mind always goes to abortion, but there's tons of them that I don't think I've ever given my opinion on because I just don't care. Like gun rights. Like, yeah, I have an opinion on it, but am I here to lecture you guys about the Second Amendment? No. Like, I care about the First Amendment because I am a creator. My life is based on being able to freely speak, and YouTube and X help democratize the ability for me to speak. So yeah, I care about the First Amendment. But am I going to tell you what I think about mass school shootings and gun laws and the NRA? No, because it has nothing to do with the markets. Nothing to do with the markets, so I don't care. That's all I want to get across to everybody. My intentions in this stream are to have a good, fun show about the markets. And politics relates to the markets, but it's not to influence people in any way. Because I truly do not care who you vote for. I do not care who you sleep with. I don't care about your religion. I don't care about your sexuality. I care about if we're buying the dip or not. Like, that should be a quote, bro. That needs to be entrenched. That needs to be on a shirt. It needs to be on a tombstone or something. I don't care about your sexuality, your religion. I care about if we're buying the dip or not. That's a hell of a quote. It's a banger. It's a banger in my opinion. But yeah. And I care about you guys enjoying the stream, bro. I care about people having a good time when they show up in the morning and getting a lot of information and details. And they don't have to agree with everything, but I hope people get value from it. And that's why you come back. Not because I have an agenda. I don't have an agenda, dude. There is no agenda. The agenda is making money. And I like certain stocks that I will analyze more deeply, and hopefully that can help other people make money. But the broader point is, let's all find a way to try to make some money. That is the goal here. All right. I think that's it. Powell speaking in about 2 hours. I'll be live in basically 90 minutes. And yeah, we'll be covering what Powell says. Yes, I need a mocktail. That's facts, bro. I need a mocktail. I'm gonna go get some water. That'll be my mocktail since there's no alcohol in it. All right, cool. That's it. I'll be back in a bit, and we'll see what happens with J Powell. Thank you, everybody. Appreciate you guys. See you guys in about 2 hours. Bye, everyone.